Hello, everybody. It is 3:45 p.m. Wednesday, January 24th. Today's a big day. Today, we have Tesla Q4 2023 earnings. This is going to be an exciting one. We got earnings in 15 minutes. We got the earnings call, I believe, at around 5 o'clock Eastern Standard Time, 2 p.m. Pacific. And it's going to be very interesting to see what happens. This sentiment around this earnings call, to me, has been the most bearish that I've seen in a pretty long time. I think that a lot of people have seen in a long time. And so it's just going to be really interesting to see how this all plays out. What does Elon say? What does he do? And how the momentum ends up playing out either in favor or to the downside of Tesla. I did a poll just how many minutes ago? About an hour ago. And I said, all right, we got an hour left till earnings. Does Tesla drop 9% like it has for the past 3 quarters? Or does it buck the massive bearish sentiment that people have going into earnings? 648 people voted. 62% said Tesla will be red after hours. 38% said it'll be green after hours. So I think the contrarian thesis is that it's going to be green because because everyone thinks it's going to be red. But if it, goes the way people think it's going to go, then it's going to be red. And where you have a lot to analyze and a lot to see in terms of what happens. David, Tom Brady, Ahad, Lars, Big Billy, Austin Smith, Angel, Jerry Hobo, Felicia, Jaggerflow, Bryant Robinson, Edmund, Ray, Exomics, Ashwin, good evening from Germany. Good evening. Thank you for being here. Tony, Carl, Colorblind Collector, Jeff, Smoke Tuna, great to be here. Good day, trading day. Thank you all for being here. We have about 13 minutes until the market closes. So let's just take a look at equities and how they ended up doing, because equities had a very interesting day. I mean, it was flat for some companies, red for others, and then very green for the semis. Palantir down about 2.51% on the day, 1690 on Palantir. Tesla today is red, down about 0.6%. Not crazy red, but it is indeed red, 207.89. And we'll see if that tanks. I mean, we'll know by 405, 410 if that tanks or if that has some momentum behind it. And if it goes higher, NVIDIA was at 625 at one point. Sorry, 628. Right now it's at 614. The reason NVIDIA's up is because ASML beat their bookings by about 6 billion euros. Semiconductor company headquartered in the Netherlands. These guys are up 9% on the day. $850. So they had a good one. Truist is up about 2.9% or 2.29%. Regionals had a good day. Microsoft officially $3 trillion now at 403 dollars in regards to their stock price and $3 trillion in the market cap. Google healthily staying above 150. It did a good job today being above 150. QQQ 426, SMH 192. CleanSpark fell a little bit. It was green for the day, but then it fell a little bit. Still overall not too bad for the entire trading day. And then you got SMCI up 2%, AMD up 5.6%, Amazon up almost 1%, Verizon down 2.24% after being up yesterday, but not too bad. On CNBC, they were talking about, is Verizon a better buy than Tesla? So now you got a lot of conversation going on around, the fragility of Tesla and where other options may exist. Robinhood, I picked up about 30 more call options for January 2025, $25 strike. I think those are cheap. I think those are very cheap. But Robinhood is down at 1084 today. I think if the stock, gets to 13, 14 past earnings, those 43-cent average call contracts, they probably double or get close to a doubling. So those are more of an earnings play for me, but they're January 2025. So if earnings doesn't go the best, we have some more time on those. But I think those fell substantially over the past 3 months, given Robinhood is down from 13 to 1084. Under 11, I like Robinhood. So that one's doing well, or that one's down today, but options I think are attractive there. S&P 485. I mean, overall, it's been a day for the Bitcoin companies, given that cryptos sucked. MicroStrategy a little bit green. Coinbase got hammered today, down 2%. And Mag 7 just continue to be Mag 7. Outside of Tesla and Apple's, red today, but it's had a really good week. Microsoft's up. Meta's up. Meta's passed $1.01 trillion on Meta. Absolutely incredible. NVIDIA, 1.5 trillion. Amazon is 1.62 trillion. So NVIDIA trying to catch up to Amazon here. It's been good. It's been a very, very good day for a very, very good week for the Mag 7 overall. June, thank you for being here. Blake says, curious what happens with Tesla. Probably sub 200, but we could be pleasantly surprised. I actually think because everyone, believes that it's going to tank, that it's not going to tank. I think it might end up doing well. I've never seen sentiment this bearish. Q3 2023. If you guys remember, that was in July. People, or no, sorry, that wasn't July. That was November-ish or late October. I mean, people were like bearish, but they didn't think Elon was going to do some of the stuff he did on the call. And on the call, he was just kind of, and I mean, even his biggest fans like Dan Ives were just not happy with the call, right? So I think if Elon says some stuff on this call that gets people upset, you're going to have the Ross Gerbers and the Gary Blacks of the world probably going off. Let's actually look at their tweets. Let's see what these guys are saying. But I kind of think if everyone's so bearish, maybe it's not too bad. Maybe it's not too bad. Let's see what Gary Black is talking. Let me do a poll in this chat. I did it on Twitter. Let me put it here of where Tesla's going to go. So let's do a poll here. Tesla green or red after hours. I think the majority of you will say red. Let's see what you guys are saying. Okay, so Gary, every time I think of Gary Black, I think of the snail from SpongeBob because his name was Gary. I don't know why. I always think that. Tesla has contacted suppliers and told them it wants to start production of a new. Okay, so he was that. So the $25,000 car thing, that's going to be interesting to discuss if it ends up happening. Do I think that's going to end up happening? I don't know, dude. It was a rumor that broke late last night. Now, maybe you could argue that insiders in the company leaked it to Reuters because they wanted the narrative to kind of switch going into earnings, which is actually very reasonable. That happens a lot just before earnings and stuff like that. I mean, Shyam Sankar wrote a whole tweet basically subtweeting the Wall Street Journal article that came out about Palantir a day before it happened. So they all know stuff that's going on. The question is, is that meaningful enough for them to actually talk about and care? So we'll see if, they have that discussion as well. And we'll keep going from there. Let's see what Mr. Gerber is talking about. I don't even think I follow him anymore on Twitter. Is he still on Twitter? He's definitely on Twitter. Yeah, he's on Twitter. Okay, what is he talking about? I think so he's talking about Elon Musk being delusional. Okay, so let's take a listen to what Mr. Gerber is saying. He's definitely not the most excited. Either he's going to eat his words today or he's. Does anyone know how many shares Ross Gerber actually owns of Tesla? I'm going to ask Bard. Let's see if Bard can. How many shares does Ross Gerber own of Tesla? Because I thought some people, said he barely owns any, and I'm like, he's so vocal about it. Like, you would imagine that he actually owns a decent amount of it. But we'll see what he says. Davis, me tuning into Tesla earnings, knowing damn well I have zero cash to deploy, regardless of a dip or not. I think every person who's invested in the stock market needs to care about certain companies on earnings. Google is one of them. Tesla is one of them. Nvidia is one of them. I would say Amazon is one of them. I would say all Big Seven, quite frankly, are one of them. And then I think some of the other companies like Costco, Coinbase, these companies that affect other sectors of the market, cyclicals, those are important. So this is one of those ones that I think everyone needs to be into and at least, understand. All right, here's Gerber. Let's hear a little bit of what he had to say today before earnings.
Okay, I'm looking at Tesla right now. It's up 0.25% at the moment. The EV maker is on deck to report earnings after the bell tomorrow. And as we look at the stock on this eve of the fourth quarter results, it's definitely down over the past couple of months, 6 months, but reports are swirling. Tesla's trying to add a little juice here. It is taking its Cybertruck on an international tour all over China. The EV maker is looking to showcase its newest model in 8 different cities there, including Shanghai and Beijing. Tesla trying to persuade Chinese buyers to look at the shiny object over here. This after Chinese EV maker BYD just launched a new lineup to rival Tesla. I think we showed you guys yesterday this thing, a Lamborghini-style luxury EV supercar. It's called the Yangwang U9. Price tag $150,000.
Analysts who work on these numbers, and Tesla gives us how many cars they've sold in advance. So there's usually some wiggle room around, foreign exchange and credits and things, but we don't expect a huge beat by any means, and nor would there be any impetus to that. So what we're really hoping for is not a miss, and that's really my concern, because obviously they've been having to discount and throw lots of incentives to sell the cars that they're making. So that's what we're really hoping, is just that they beat the number and it's a solid quarter.
Well, you're talking about incentives. Let's just cut to the chase. That is price cuts. They're trying to juice the number, and they have done well.
By the way, I'm looking at Gerber Kawasaki Holdings. If this is accurate, the website I'm looking at, he has 3,600 shares of Tesla. It's only 3.97% of the fund. I mean, I'll put this website in the description. Let me know if this is the wrong website, but that's I mean, for how outspoken he is, it's not that much Tesla.
Well, they had just reported record deliveries, Q4 record deliveries, incredible number here. But at what cost? That's what shareholders are probably asking you right now through the TV set.
Right. And this is what I'm trying to explain to people. See, Tesla is working on a dynamic pricing model where they don't make any effort to increase demand. And it looks like the way they're trying to increase demand is by doing some sort of world tour for the Cybertruck, even though they don't have Cybertrucks to sell people yet, and maybe not for a while. And so, they're trying to goose other sales by using the Cybertruck, but they just need to advertise like every other car maker, on the football game, like the 49ers game had the highest ratings ever, and all the other car companies are advertising except Tesla. So people don't know anything about EVs, and we've seen a lot of FUD about the cold weather, and Tesla makes no effort to counter this. So this is what hurts them. When they make more cars, they have to lower prices to sell them because essentially they're not creating any new demand. And most of the EV buyers who want an EV have bought an EV. So I don't see where Tesla goes from a sense of earnings. So they'll sell more cars, but I don't see how they make more money doing that with their current strategy.
The stock over the past 6 months has lost about 22%, but there's a different time point on the sort of rearview mirror, and that is that around November 15th of last year, the CEO, Elon Musk, began promoting or amplifying anti-Semitic posts that are on X, the platform he owns, formerly known as Twitter. Since then, the stock has dropped about 13%. And a lot of people say, what he is speaks so loudly that they can't hear what he is saying. Well, what he's saying also speaks very loudly. What are you hearing from your clients who have accounts with Gerber Kawasaki and also the clients who own Teslas?
Right. And I do have to stress, we have thousands of clients at Gerber Kawasaki on top of our fund GK, and which also has many clients. And so, most of our clients have Tesla. So it affects a lot of people. But when you put up that chart about Tesla's performance, what you didn't show is that the market has actually taken off since that date. So relative to other tech stocks, Tesla's vastly underperformed since Elon has taken such outspoken and, in my mind, controversial negative views. And by doing that, many of my clients, and I tweeted this several months ago, were furious and sold their stock. And now it turns out that was probably a good move.
That's so weird that he's saying that as a fund manager. We got Tesla earnings in 2 minutes. I'm refreshing the screen. I'll load it up right when it's there. But selling on short-term volatility because the CEO says something that people don't like is just such a weird way to hold Tesla. But especially for someone who manages, institutional money like that.
Because the stock is much lower from then. And as a firm, we've been forced to lower our allocation to Tesla because as we've seen the problems mount and the solutions that we see not being implemented, we've had to be prudent investors for our clients and understand that the story has changed.
They have not been forced. That was Ross's ideological. I do not think they've been forced. They could have made an argument for why they should be buying this dip, not selling. I think that was them wanting to do that. I'm refreshing the page. We're going to let Gerber speak, and once it refreshes, we'll change to the numbers in 30 seconds.
The Tesla story is not the same.
What do you make of his play for more control? He wants 25% control of the company. Right now, he has about 12%. He used to have much more, but he's sold a lot of his shares in order to pay for what was a very expensive price tag for Twitter. The board, we haven't heard from them. We're waiting to hear. A lot of people on this board, but it's rare that they've ever, if ever, swatted down Elon Musk. Charlie Gasparino makes this point all the time. The Tesla board does not rein him in. Granted, over the past several years, why should they? The stock has done incredibly well. But right now, the question is, should he be given such a huge chunk of power? And he says, if you don't give it to me, then I will develop my AI ideas somewhere else other than Tesla.
Yeah, so the board is
deck not out yet. I'll refresh. As soon as it's out, I'll switch.
His friends and family. So, I've never seen a board more conflicted than Tesla, and they just settled a lawsuit where they were so overcompensated, they're having to give back $750 million of overcompensation that they settled in this lawsuit. And Elon's pay package himself is worth $50 billion today, which you would think would incentivize any human on earth, right? So when you look at his pay package plus his stake, it's closer to 20% of the stock, and he fully controls the board. And what he's basically saying is, I want you to give me like 30 to 50 billion of compensation more for me to do my fiduciary responsibility to the company. So there's never been.
All right, so the number's not out yet. Let's take a look at what we got going on. I'll keep the Webull open as we're looking for the numbers. A bunch of new volume did just come in. It is down after hours slightly. Nothing crazy. We're looking for the numbers. They are not out yet. And so we are waiting for them. Usually they do come out like about 4 or 5 minutes late. So 4:05-ish. We're red. It's not crazy red, but it is indeed red. On Gerber's point real quick about the 25% ownership on AI, I think Elon's a genius for doing that. I mean, AI is too powerful. He already lost control of OpenAI, even though he seed funded them. You cannot have Tesla become one of the largest AI companies and not have a interest in not have a voting interest that is at least somewhat superior. And still, he has to get 66% of the board. So it's not like he has unilateral control like Zuck's like is basically, the dictator there. But I do think him wanting 25% is healthy. I mean, that guy actually knows what the hell is going on when it comes to technology. Okay, it's still not out yet. Still refreshing. Still not there. It's 410. No, it's not 420. It's definitely not 420. It's usually 405. Yeah, usually 405. So we'll see if it's there. Ty Gordon said, shots fired, man. That was nuts. How is this stuff even legal? I mean, remember, Ross Gerber is the person who called Palantir equivalent to Nazi Germany. So, when it comes to saying stuff and being someone who manages billions of dollars, Gerber Kawasaki manages $2 billion, dude. It's like, it's a little crazy. Let me actually pull up that link while we're still waiting for what we're looking for. And let me show you guys what he owns in the fund and keep it up from there. But so far, no numbers are out yet. Let me pull this up. YouTube, then we'll get to this link. Now, we are red after hours. There is a volume spike, but I think a lot of this is algorithms right now because no one fully knows where the numbers are going. 62% of you, I'm going to close the poll, said it's going to be red after hours. So far, you guys are correct, but let's see what happens when it pops up. All right, here is the actual holdings of GK. We got about 2-3 minutes until it comes out. His largest holding is MGM Resorts International. Or sorry, NVIDIA. It's by weight percentage, but by shares, it's MGM. By weight, it's NVIDIA. So NVIDIA is not bad, but I mean, the second biggest bet is MGM. So, I don't know. It's interesting. I don't know if, someone, I don't know. Betting on hotels is definitely interesting. And then you got Tesla all the way down there at 3,600 shares. 3,600, dude. I was speaking to some people today that were buying Tesla stock before earnings. They were buying a lot more than 3,600 shares before earnings, and they're individual people. And there's Gerber Kawasaki managing billions of bucks. I don't know. It's also very, I don't know. It doesn't look as solidified or concentrated. It's kind of like, it's not that special. It's Big Seven with some hotels. That's his fund. And so, he grew to fame off Tesla because he was early in Tesla, but it seems like now he kind of just doesn't really care. All right, let's pull it up. What do we got? We have down 0.24%. That's not really anything. Still refreshing the page. Shareholder deck is not out. We will see what happens. It's not a sell-off yet, guys. It's not a sell-off, dude. It's down 0.4%. It's not a sell-off yet. Most people don't have the numbers yet. Once those numbers come in, though, we're going to see. Oh, so someone got the numbers? Not a huge miss. Let's see. Let me open up Twitter as well. Usually Twitter has the numbers very quickly. But yeah, I think even Twitter retail is waiting for 405. Oh, there it is. It's out. Okay, so here we go. It's not out on the deck yet, but here are the official numbers. Here it is. Yeah, Gergen got it. We missed on revenue, 25.17 billion, estimated 25.87 billion. It's a slight miss. It's not crazy, but it is a miss. EPS 71 cents versus 74 cents. That is a miss, but remember the estimated EPS at 74 cents was already down 32% year over year. So the fact that we missed on that, I don't think the street's going to be happy. And then margins, you got 17.6 versus 18.1. That's down about 5 basis points. That's not horrible, but I'm sure the street wanted to be in the 18.5 range, not back in the 17s. Let's go to the stock. How bad is the stock? I haven't looked at it. How bad is the stock? How bad is it? How bad is it? And there you go. We are under 200 Dolores for Tesla, 198, down 4.5% on Tesla stock. We are down 5%, 5.2%, 5.3%. It's like a little roller coaster. We're all just at Disneyland having some fun. Actually, we're not at Disneyland if you own Tesla stock, because Elon Musk told Bob Iger to go F yourself. So he's not allowing Tesla shareholders into Disney Park. That's a joke. That's not a real thing. But it is down. It is down 5%. So we're under 200. We're under 200. Now, the question is, what are they going to say on the earnings call? The shareholder deck is out. Let me download that. What are they going to say on this earnings call that changes the fact that they missed on EPS, they missed on revenue, and they missed on their gross margins? I don't know what they're going to say. The market definitely thinks they don't have shit to say. Down 5%. I mean, let's see if there's a recovery too. This happened back in Q3, and it did recover a little bit, and then it sold off the next day. But yeah, market's not happy. Okay, let's dive in. Let's dive in. Let's dive in and see. Derek, I just saw your comments. I see that you're listening right there. You said, ouch. Yeah, I see you, man. But again, the numbers that missed, they're not substantial misses, but the street was already pricing in like low expectations. So missing on those expectations, even though they're slight, this is where the psychological nature of the stock market comes in. It's like, you can't just miss on those because the street's just not going to be happy. Granted, I think maybe that's a dip for us to be more excited about. Okay, let's get into these numbers. Let's get deep into them. Okay, profitability. 2.1 billion in Q4, 8.9 billion in GAAP profit and GAAP operating income. 15 billion bucks in net income, 7.9 billion in Q4. So they did 15 billion in total profits in 2023. Not bad at all. Operating cash flow of 13.3 billion, free cash flow of 4.4. A 3.3 billion increase in our cash and investments. Oh, wow. So now they have 29 billion in cash. That's not bad for Tesla. We kind of knew that would happen, but that's good to see that they're increasing that cash reserves. In 2023, we delivered over 1.2 million Model Ys, making the best-selling vehicle of any kind globally. For a long time, many doubted the viability of EVs. Today, that's the best-selling vehicle on the planet. Free cash flow remains strong in 2023 at 4.4 billion, even as we focus on future growth projects. They got the Tesla factory, Mexico factory, India factory. They've got a lot of different stuff going on. Capital expenditures are their highest they've ever been, but they still have pretty damn good free cash flow margins. Energy storage deployments reached 14.7 gigawatts per hour in 2023, more than double compared to the previous year. So that's growing 100% year over year, while energy generation and storage business profits nearly quadrupled. Wow. Energy and I've been talking about this on Market Over for the past couple of days. I thought energy was going to be the star of this show, and I think that's what they're going to talk about. Energy quadrupled, 4x in 2023. The profits, gross profit of our services and other business increased from negative 500 million loss to a negative 500 million profit in 2023. Okay, there's a lot of numbers we want to get into. There's a lot of numbers, so let's see what we got to go. Let's see where is it right now? Stock is at 199, so it's not selling off as bad as it was before, but it is below 200. Calls at 5:30. Yeah, I think calls at 5:30. Call might be at 5 o'clock. So it might be at 5:30. We'll see. But here we go. Okay. I want to see the energy business. I want to see total automotive revenue was 82 billion in 2023. So we're looking at full year numbers right now. We're not looking at quarterly. Let's look at full year and then we'll go to quarterly. 82 billion growing at 15% year over year. 54% year-over-year growth in the energy business. So that's above the 40% metric last quarter, which is really nice. I mean, look at that year-over-year, 3.9 billion versus 6.03 billion in 2023. Services and other revenue, 6 billion. That's up 8 billion in 2023 compared to 2022. That's up 37%. So top headline numbers, the stock or the automotive revenues grew 15% year-over-year, energy 54%, services 37%. Revenues are up 20% year-over-year, 19%. Total GAAP gross margins are down about 735 basis points, and operating expenses are also up 22% year over year, which is pretty in line with what they told us to expect. Total revenue grew 3% year over year in Q4 to 25.2 billion. Year over year revenue was impacted by the following items: growth in vehicle deliveries, FX, other parts of the business. Okay, we already expected all that stuff. Where is the guidance as well? Let's see where they have on terms of guidance. We'll get back to, they have some stuff here about FSD and the bot. We'll get into all that. Energy storage looks great. I mean, just that chart alone is incredible for 2023 and makes sense. They put up double the amount of revenue. Did they issue guidance? Does Tesla issue guidance? Okay, here, Outlook. Our company is currently between two major growth waves. The first one began with the global expansion of the Model 3 Y platform. The next one we believe will be initiated by the global expansion of the next generation vehicle platform. Okay, so that's a little bit of a hint of that $25,000 car. In 2024, our vehicle volume growth rate may be notably lower than the growth rate in 2023. Oh boy. Oh, wow. Mr. Seymour Duck, I said that right when you typed that in. Wow. We were both on the same sentence. Wow. That is not going to be, so Tesla's at 204, so it's above 200, so the dip got eaten up, but that's not something the street's going to like. Our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023 as our teams work on the launch of the next generation vehicle at Gigafactory Texas. Basically saying, look, we're working on that $25,000 car. You got to stick with us the next couple of years because we can't grow every part of the business the way we're growing over the past couple of years because we're trying to get our Honda Civic, Toyota Corolla competitor out there in the market. In 2024, the growth rate of deployment and revenue in our energy storage business should outpace the, oh my goodness, I feel like, dude, this is exactly what I think we've been talking about on the Market Open. The reason we've been talking about this, look at this last sentence, the growth rate of deployments and revenue in our energy storage business should outpace the automotive business. Why have we been saying this? Lithium prices are down 80% year over year. And that signals that there might be some problems in global demand with electric vehicles because you don't get those prices down that significantly unless there's an issue with demand, even though obviously supply chain bottlenecks have opened up. Tesla bought a shit ton of land in Shanghai for their energy battery packs. And it makes all the sense in the world when lithium prices are down 80% year over year, you need those lithium to make the batteries to do the energy storage, to invest heavily in the biggest part of the business that's growing 54% year over year, which is energy, not automotive that is growing 7% year over year. So it makes a lot of sense that that's what they're pivoting to. It makes a lot of sense. We have sufficient liquidity to fund our product roadmap, okay, while we continue to execute innovations, blah, 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 blah. Cybertruck production and deliveries will ramp throughout this year. In addition, we continue to make progress on our next generation platform. Okay, that's not the most exciting guidance. I'm not going to lie. Webull has, so 204 right now, down 1.84%. Bruno says, bro, growth from energy obviously going to be bigger than auto. Auto is way bigger right now. Yeah, auto's bigger right now in terms of the gross revenue it produces, but the energy business is where there is excitement in terms of just pure year-over-year growth. Let me look at the quarterly numbers. So, wow, look at this, guys. Sequentially, automotive revenues are up 1% year over year, quarter over quarter. Energy generation is up 10% quarter over quarter, and services up 27%. Like there is a 10x multiple on energy growth quarter over quarter versus automotive revenues, and that's primarily because of obviously price cuts and factory delays and production, all that stuff. Energy didn't have to deal with all that, and that's why energy is growing. I think the bull case on Tesla's energy and the bot, quite frankly, right now. Obviously the cars are cool, but like the automotive margins and interest rates are just not at the price where people are, begging for these. I mean, the reason they just lowered prices in Germany and China is because of these interest rates, at least definitely, in overseas in Europe and China, they just have a shit ton of competition with BYD. But the energy business seems to be getting subsidized by some of the car business in terms of the growth. Total automotive revenues, that's up 15% year over year. We saw that. I mean, it's not a horrible earnings, but it's definitely not an earnings that the street's super excited. No, I'm not. That's not year over year. I'm looking at quarter over quarter. I'm looking at quarter over quarter for Q2, Q3. Oh, you're looking at year over year for Q4. Oh, okay. I see what you're saying. Well, it's not that. I mean, 1 to 3% is not that crazy. But yeah, year over year, it's up 1%. Energy still year over year is up 10%. So it's a 10x multiple from Q4 2022. Q4 2022 they did 21.3 billion. Q4 2023 they did 21.5 billion. So when people say the growth is, stalling, for the automotive business, it is. Sunny Raj in the chat says growth in energy is not seasonal like car sales. That is true. I mean, Elon had this quote on the other day that I'm pretty sure people have heard a million times, but the sun gives enough energy to the earth in 1 hour that we could use to power, if we harnessed all that energy, we could power the earth for an entire year, right? It's just about harnessing that energy. And, there's really not that many companies in place to be able to harness that energy outside of Tesla. Let's go to the suits on CNBC and see what they have to say and what their coverage is like. And then we'll get deeper into the numbers and see what else we've got going on. These are not the best numbers right now. Streets at 203, so dip got pretty much eaten up. But let's see what they are Okay, so CNBC is not talking about. They're talking about ServiceNow for some reason. that's super exciting. We'll talk about ServiceNow when we got Tesla earnings. We can finally say demand issue without being sarcastic now. Yeah, I think a lot of bulls had to deal with a lot of nonsense over the past couple of months or there's a lot of bears, not bears, but just people who are generally like, look, I think there's a demand issue. They got pushback every time saying, oh, there's not a demand issue. Look, there might be a little bit of a demand issue, and I'm sure the earnings call will give us broader clarity, but I'm not saying that just to say that. The numbers are proving that the demand might not fully be there, which is why we're seeing the price cuts, even if the demand hurts other manufacturers a little bit more. We got Ross Gerber on Bloomberg. Let's see what he has to say about these results. I think he just pulled up.
Reach maximum efficiency of production. And so basically every time we discount, it's just going to cost shareholders more. Now, the good news is this is great for Earth because people are getting cheaper and cheaper, EVs, which, are great. The bad news is it's coming from shareholders' pockets. And so if you're a shareholder, it's time to really assess, does this company deserve a 60 multiple of forward earnings? And I think that's what investors are going to be doing over the next several months.
Okay, I want to bring back in Red Brown because he's been watching the numbers come out. Red, what else sticks out to you? I know the looking at the production numbers certainly sticks out. Anything else in these numbers here? We're seeing shares down about 2% as we speak.
Yeah, I mean, I think everything that we're seeing right here from the numbers is that this is kind of the cost you pay for the game that they're playing of continuing to cut these prices. Yeah. You're seeing a bigger and bigger disconnect between their top line growth and their earnings growth, right? They did hit record revenue. That's going to get lost in the shuffle here today. But it came at the expense of over 40% drop in their earnings, right? So it doesn't seem like it's the path forward. I think Ross is hitting on some interesting topics here as well, as kind of where does the growth come from? A lot of the share price is predicated on some of these sort of pie in the sky initiatives, be it AI, huge question marks over that, right, with whether or not Elon does that inside the company or not. So hopefully get some more insights on that when the call goes later today.
Ross, what is the number one?
I think from my perspective, it's kind of what we're hitting on right now, which is where's the growth coming from? If you're not going to grow cars by a lot, this is not a good thing. So I think my concern is 4680, and this is the story behind the story, which is one of the scaling issues they're having with cyber and semi is that 4680 is just not working as quickly as they had hoped. And they planned all of production in Texas around 4680 originally, and they've now had to pivot. And so this has caused extra costs, lots of complexity issues, and I don't think they've mastered 4680 yet, or even close for scaling at any mass level. And this is a huge detriment to Tesla moving forward because they have to get this technology right to ramp cyber and semi, which is where growth will come from.
Hey, 20 seconds really quickly. What do you mean 4680 really quickly?
These are the new cells that that they built for EVs. And these new cells are 7 times more powerful, much more efficient, charge faster, and they're wonderful, but they haven't been able to scale them as quickly.
Dude, Ross kind of sounds happy. Do you guys feel it in his voice? Do you feel it? He's kind of like, well, where is the growth coming from? This is why we sold off the stock for our clients that got so mad that Elon was tweeting when he was taking a shit. Like he feels so happy. You can kind of tell in his voice. And it's a big FU to a lot of the people that follow him because they follow him because of Tesla. But he's kind of picked the dark side. What's that quote from The Dark Knight? You either become a hero or live long enough to become the villain. Ross is I would say Ross, in the context of Tesla, he's kind of become a little bit of a villain. He's gloating. He's definitely gloating. He's gloating that he called out obvious shit. Yes, that's also true. He's gloating that he called out obvious shit. Okay, so the stock is at 201. It's trying to maintain some momentum here on the stock price. We got a lot to dive into earnings. Here's what I'm going to do. For anyone who wants to ask a question or wants to make a statement or just voice their opinion, I'm going to put the StreamYard in the chat. We did this last Tesla earnings, and it was pretty fun. I think we have, when is the earnings call going to be out? The earnings call is going to be out in, I think, 5:30, in an hour and 10 minutes. Yeah, 5:30. Okay, so we have an hour and 10 minutes. So for anyone who wants to join, that's in the chat. And if you want to join, you can hop on, camera on, mic on, and, we can talk about Tesla, bullish, bearish, whatever perspective you have. We can discuss all things Tesla. Right now, 200 Dolores on Tesla 202, down 2.6%. That dip was eaten up at 196. So there were obviously plenty of buyers willing to capture below 200. Question becomes after the earnings call, does it really tank below that? I think this is really algorithmic. I don't think this is retail. I definitely don't think this is institutional yet. The numbers weren't that horrible. But that one quote of we can expect, what are the quote right here? In 2024, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023. That one's tough, dude. That one's tough. Because what did they deliver in 2023? They did 1.8 million, right? 1.8 million vehicles. Our vehicle volume growth rate may be notably lower. Notably is a very interesting word, dude. Notably implies like you're gonna note it. You're gonna see it. You're gonna write it on a notepad. Like it's notably visible. And that, like, what is that? 1.5 million, 1.6 million, 1.7, 1.4? You know, I mean, what is it? How bad is it gonna be? How bad is it gonna be? And how tough is it gonna be? So we'll see. We'll see. You think Ross is a short position on Tesla? I don't think Ross is a short position on Tesla. I think Ross Gerber hates Elon Musk. I think he's just gotten absolutely tired of how, Elon has conducted himself for whatever ideological reasons that Elon believes in. And that is why he's not happy with Tesla. But that's why we're seeing some downside pressure there. Okay, here's the deck. Let's get into some other stuff until we have earnings. So let's look at energy storage. Let's talk about that. Energy storage deployments decreased sequentially in Q4 to 3.2 gigawatt hertz for a total energy deployment of 14.7, a 125% increase compared to 2022. So even though it decreased sequentially, still was really good year over year. That's up triple digits, dude. I think you fucking double down on the energy business. I mean, like that seems like the thing that's actually growing. Ross asked on Bloomberg right now, where's the growth? The growth is in energy. The question is, do they have a plan to scale that growth in energy? While we expect deployments will continue to be volatile on a sequential basis, impacted by logistics and global distribution of products at any given time, especially with the Houthi crisis we're seeing in the Red Sea, we expect continued growth on a trailing 12-month basis going forward. We continue to ramp our 40 gigawatt hertz mega factory in California. Solar deployments declined on a sequential and year-over-year basis. Okay, so solar is actually down. Downward pressure on solar demand. Well, that's because of rates. I mean, yeah, if Enphase is struggling, solar is struggling, Tesla's going to struggle as well. Interest rates have remained high. Profitability in the quarter was negatively impacted by lower deployments and seasonal weakness in our solar energy part of the business. Services and other business, this continued to grow in 2023, achieving record revenue and profit. Okay, so energy storage was good, solar sucked, and services was actually not too bad. Steve might join the call in a little bit. He might be there. But right now he can't join, but we'll see if he joins in a bit. Austin Smith says, I think Elon is going to recognize numbers missed, but he will be excited for all the projects he has in the future. Well, like that's all he can do, quite frankly. When you have a crappy earnings in the stock market, you can only sell a dream. I mean, it's kind of like being a politician, right? A politician that has, like, what is Joe Biden doing right now in student loans, right? He promised everyone would get rid of $10,000. That didn't happen. Supreme Court stuck it down. So to get reelected, he has to promise the dream. He has to promise, well, if Trump gets elected, you're definitely not getting that student loan thing. So I'm kind of your best option. And as sad as that is, I mean, that is basically what he has to do as a politician. And I think a lot of times CEOs also have to be very political in these calls just to keep, shareholder faith alive. I mean, it wouldn't surprise me if Elon puts out the quote again that we will be bigger than Saudi Aramco and Apple combined, right? Okay, AI and software and hardware. In Q4, we released our latest FSD beta software, V12, to select Tesla employees and more recently to customers. This was like a couple of days ago. V12 utilizes end-to-end training and enhancing the driving experience. We also introduced the second generation of the Optimus robot, which uses Tesla-designed actuators and sensors and improved AI capabilities. Both FSD Beta and Optimus are trained with similar technology pillars, real-world data, neural net training, and cutting-edge hardware and software. One thing about the bot that's just super, super interesting to think about is that the TAM for that bot is 50% of global GDP, which is 50 trillion. Global GDP is 100 trillion. 50% of global GDP comes from the workplace. So the TAM is just, you can basically say it's infinite, especially if the goal is for it not to just be in your house and do your laundry, but to replace, workers. And so that is a huge bull argument. It's just how far is that, when it comes to the product offering, along with how far is FSD? Because if that's not coming soon, then at the end of the day, it's not really real. Vehicle and other software, we deliver the Cybertruck with an all new user interface and new communication bus ether loop that efficiently moves data while significantly reducing wiring. As part of our holiday update, when parking Tesla vehicles without ultrasonic sensors display a high-fidelity 3D rendering of the vehicle surroundings, including nearby barriers, vehicles, and painted markings. Wireless Bluetooth headphones can also now be paired. Okay, that's fine. Battery, powertrain, and manufacturing. Cost of goods sold per vehicle declined sequentially to above $36,000. Even as we approach the natural limit of cost down on our existing vehicle lineup, our team continues to focus on further cost reductions across all points of production from raw materials to final delivery. So the cost of goods per vehicle in Q4 was just under 40K, 2022. And in Q4 2023, that's down basically 2,500. Right now at 36 grand. Interesting. So, I mean, that's good, but that's coming down. Obviously, interest rates have forced margins to come down as well. So that's the tough part that they have had to contend with. But at least you're seeing some cost of goods coming down. Yeah, from what I'm seeing at a bird's eye glance at earnings, energy business is booming. The bot is still a pipe dream, even though, you know, we're kind of excited for it. But until automotive growth revamps, it's going to be tough to imagine, you know, things scale. Let's share some CNBC analysis and keep going from there. Let me just pull it here. Oh, we got Tasha from ARKK. Okay, so let's see what she has to say about these earnings. Here we go. Let's get her right there.
We had the lack of details in that 2024 guidance, just the warning essentially that it's going to be slower in terms of deliveries. But the flip side of that is the auto gross margins, excluding credits, at 17.1% was better than expected and represented a sequential increase. Your thoughts?
Yeah, I do think, you know, it's important to note gross margins, automotive gross margins, ex credits did tick up. And I'd say, you know, broadly, the picture here is the future is really electric vehicles, right? We already know that. Other traditional auto manufacturers are actually cutting back on their electric vehicle plans and programs over the next 5 years. And they're not as profitable on those platforms as Tesla is, because Tesla's still the leader in EVs. I'll also say that for the future, you know, we're very excited that Tesla is investing in AI, that they're focusing on the next generation vehicle platform, because we think that robo-taxis, that autonomous driving is completely going to change Tesla's business model. I think that could
Okay, I think we all agree with her. Robo-taxis are great. The problem is, dude, it just annoys me, and I'm sure for the Tesla bulls, it has to annoy some of you. That shit's not real. It's not real at all. It's not even close to being real. Robo-taxis and that robo-taxi network and that fleet of autonomous vehicles that basically competes and destroys Uber, right? Because what's the need for an Uber if you get this on? Like, the regulations aren't there. The cars aren't ready at the level. Elon Musk has admitted FSD is still going to take, like, it's just not there. So I don't know if he can get on the earnings call and sell that story. That story is not there. And anyone who's a bull that thinks that story is coming within the next 18 months, I think you're delusional. The amount of regulatory hurdles that GM's Cruise is going through in San Francisco just to make sure they don't kill somebody as they're doing it. I'm not saying Tesla's FSD isn't way better than Cruise. I'm just saying it's not operationalized yet. And it's going to get there. Exponential growth in AI is happening, but it's not happening in the next 12 months in my opinion. It's definitely not happening in the next 6 months. So that is not a story Elon can sell on earnings call. He cannot sell robo-taxis. And quite frankly, to his credit, I don't think he's harped on that over the past couple of quarters. He's mainly talked about other things, FSD, but not just robo-taxis. But remember, it's going to take a while for that to play out, and I don't think that can be the bull case today.
And push overall gross margins up to north of 50% over the next 5 years. And I'm looking forward to hearing more about that on the call.
Okay, and I've heard you talk about that as well. We've heard him talk about that. Steve, I want to get your thoughts on some of the commentary we've seen in this release actually about AI. And specifically, it says here that while they continue to execute on innovations to reduce the cost of manufacturing and operations over time, they do expect hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. Is this something we've been hearing along the way too, or does this represent a ramp up in the rhetoric on AI?
Well, I think it's just part of Tesla's story. And look, Q4 results are a tale of two cities. Tesla posted record $25.7 billion in Q4 revenue. It's going to be roughly $97 billion for the year, and they sold 1.8 million cars. That's whopping 55% of the U.S. auto market. That's not a bad year. But the big picture is growth has slowed from 51% year over year last year, 19% year over year this year. So the big story is BYD is coming on quickly. They will likely pass Tesla next year as the dominant EV seller in the world. So right now, Tesla is still number one, but they're going to have to find a higher gear to stay on top. The AI story is part of bringing costs down. The robo story is another part. And there's also Tesla's rapidly growing energy division. So these are all part of the picture that investors are going to have to keep an eye on. But get ready to see the big smackdown, Tesla versus BYD for global dominance in the EV sector.
Okay, and so Tasha, I guess the question for investors is, in 2024, what kind of a multiple does Tesla deserve? Because it's still very richly valued for right now. And I mean, the robo-taxi thing, I'm not buying it for any time soon. I'm not even sure that means people buy more Teslas if they can just rent them, and if that's actually good for the company overall. But how do you calculate what kind of valuation it deserves right now, given a lot of other companies are pulling back their revenue expectations and getting dinged?
So first, I'll say on robotaxis, I mean, I'd encourage everyone to look at the videos online that are coming out of FSD, full self-driving version 12. It's amazing. It drives like a human. People are doing full drives, zero intervention.
Okay, let me just give a little bit of my commentary here. I love Tasha. She's awesome. Great analyst. Research is great. The videos I see online are MKBHD like getting the steering wheel before he's about to crash into a toll booth. Okay, those are the videos I'm seeing. And yes, FSD is good. It's not horrible. But at the point where you're about to crash into a toll booth and you have to grab the wheel, there is no way in hell. That's like me saying Palantir should be worth $1 trillion, right? Like, it's just stupid. If you're a bull and you believe robotaxis are coming within the next 18 months, I genuinely think you are a bit delusional here, because at some point we have to realize that people don't just want to be in that car and let it take it over and just assume that everything's going to be safe until there's enough guinea pigs that have tested it out. And there haven't been enough guinea pigs yet. And unfortunately, there's going to be a lot of bad things that happen when FSD becomes mainstream, if they can get through the regulations, in order for that thesis to play out. That's not here yet. That's not here. Is it going to be a major bull case for the company? 1,000%. $200 a month, printing 90% margin as a SaaS company because you've innovated on AI and FSD. It'll be great, but it's not going to create a robo-taxi fleet anytime soon. And those YouTube videos are not, it's not what you can sell to investors.
So the fact of the matter is, robotaxis are already possible today, just in select areas. I'm not saying it works everywhere, right? But we have evidence that it's possible. We see other companies like Waymo also telling us that it's possible. But Tesla itself has great technology. And when we think of scale and the number of cars that they're producing, to put this in perspective, the data advantage that Tesla has is orders of magnitude higher than other players.
See, the problem is no one's denying that. No one's denying that. It's like when it's like Palantir, right? I have to deal with this debate all the time. I'm a very big Palantir bull. I'm like, well, they have the best product. And everyone's like, yeah, but they suck at sales. Their growth is below 20%. It doesn't matter. It doesn't matter if you have a data advantage. I mean, it does matter long-term, but the execution of making a full fleet of millions of cars that people would stop buying cars and they would pay some $100 a month subscription to have this thing come pick them up and take them to the airport and then magically get there while they're jerking off in the back seat. Sorry for my French. I don't think that's happening anytime soon.
Tesla is collecting or is able to look at data from more than 2 million miles per day of customers driving in full self-driving mode. That compares with other players like Waymo that, they might have collected single-digit millions in the lifetime of the project. So again, I think robotaxis are already here. Don't miss this opportunity. And again, I'm looking forward to hearing more about that rollout plan on the call.
Okay, so Steve, is this an Uber moment for Tesla or an Apple moment? And I separate them this way. When Uber was getting ready to IPO, there was all this talk about autonomous driving, being a bumper to their valuation. That didn't really go anywhere. But then at the same time, you talked about BYD versus Tesla. There used to be talk 10 years ago about, Samsung's going to kill Apple's margins because it's just, a black rectangle. Where are the margins in that? And Apple managed to outpace the competition. So which is Tesla?
I think it's Apple. And look, I think autonomous vehicles, robo-taxis are a big deal 3, 4, 5, 10 years from now. The big picture now is the whole world's going electric. Someone earlier said, electric sales are slowing. Nonsense, grew 33% globally. I think they'll do at least that this year. Here's the big picture that investors need to look at. Tesla dominates the US market, which is 15% of all vehicles sold in the world. They dominate the European market, 17% of all vehicles sold. By the way, Tesla's Model Y, the single biggest selling car on the planet, gas or electric. Those are huge accomplishments. It's a powerful brand. The fly in the ointment here is China is today 32% of the global market, and BYD has managed to show up a very attractive family of cars in the $15,000 to $30,000 range. And the big growth markets globally in the auto industry are no longer the US or Europe. It's places like India, Southeast Asia, South America, Mexico. That's why Tesla needs to kick things into gear, get their Project Redwood $25,000 car into market by 2025 and in mass production by 2026. If they do that, they'll be in great shape. For the next 18 years, they're going to have to make do with an updated Model 3, new facilities being built in Mexico and Shanghai. And don't forget, they have a rapidly growing energy division. They've just got a lot of pieces to the puzzle that others don't. On balance, BYD is going to do awfully well, but Tesla still has the most powerful brand in the world. As the whole auto industry goes electric, it's going to be fascinating to watch.
Steve Wesley, we await that call. So many investors. And Tasha, thank you.
Oh boy. So stock, let's take a look at the stock. He actually said some interesting things I want to talk about. 202 on the stock right now, down about 2.56%. Not too bad. We got about an hour until Elon Musk speaks. I think he'll be on the call. I would imagine he's on the call. 202.32 right now. I mean, look, it's not a horrible dip. It was down below 200 before. So market ate it up. Let's look at the rest of the market real quick after hours as well and see if Tesla messed up. The S&P is barely down. ARK Innovation. Oh, ARK's taking a little bit of a nosedive. ARK owns a lot of Tesla. You know, let's see if ARK buys the dip. Let's see if ARK actually buys it. If not today, maybe tomorrow. Maybe they're waiting until it really sells off tomorrow. If it will sell off, it'll be very interesting to see how Kathy ends up playing this. Yeah, rest of the market is fine. So Tesla's not affecting the rest of the market too much. Bitcoin 39.6, Netflix holding its gains, Nvidia holding its gains. Let's see, 610 probably on Nvidia, 616. So Nvidia is doing fine. Palantir was already red for the day, below 17. Palantir right now 1675. So that's fine. Rest of the market is okay. ASML also holding their gains at 848. But Tesla is the one that is going down. Kaio says, Amit, very Tesla bullish, and I purchased 100 shares at 208. Look, I don't think that's the worst price. I think under 210 is actually not the worst price. It depends on how badly this earnings call goes. Because if it was going to like 170, 180, we would see it below 200 right now. And we're not seeing that. We're seeing it, easily stay above 200. The problem is whether the algorithms and institutions feel excited after the earnings call. And if they don't, the bad boy is going below 200. I think this earnings call, if Elon is just not saying anything crazy and he just reassures investors that, hey, there's a ton of growth coming in a variety of sectors, even if it's not automotive, then maybe they're going to be okay. If not, it's going to be a little tough. A couple of quick things that I just wanted to talk about. That point the analyst made, I think, was really interesting. China is 32% of the market. BYD has much cheaper cars than Tesla, and they're scaling faster. The United States and Europe, North America is not going to be the place over the next decade where a lot of the growth comes in terms of people buying cars. It's going to be India, Mexico, and Asia. This BYD argument I've been hearing over the past couple of months, I never really took it seriously. I guess maybe it's time to look at BYD a lot more seriously, just by the sheer fact of how competitive they're becoming in China. And China, again, 32% of the entire global auto market. Tesla's 25% of revenue or sales happen in China. So yes, they had the best-selling car in the world. That was great. But if you got another brand that's just selling more units, even if they're not selling the best-selling car in the world, that's tough. That's very, very tough when it comes to competition. Arnie says, depend how much Musk cries. I think Elon's actually not going to say anything too crazy. I think he's said enough crazy stuff over the past couple of weeks and he knows, or he might just say, forget it, I don't care. And he's going to have fun. We will find out. Gary Black says, unless management clarifies 2024 volume guidance or provides a 2024 auto gross margin outlook, investors are unlikely to respond favorably to these results. I think he's right. They didn't give a volume guidance. We don't know if they're doing, they said notably lower. 1.8 million they did last year, 2023. Is that 1.7, 1.5? I don't know. If it's 1.4, that's tough if you're delivering 400,000 less cars. And remember, the Germany factory is shut down till February 12th in Berlin because the Houthis are at war in the Red Sea. And, Tesla's like, all right, well, we can't, get our shit into Germany and like do what we need to do. So that's why that crisis actually does affect the entire market. Obviously, it affects Tesla and global supply chains, but they need to provide volume outlook, and they also need to provide a margins outlook, because margins came in 50 basis points below what the street would expect. If they can get back up to that 18.5%, I think that would be nice. But if they don't, that would also not be good. Ashwin says, quick question. Would you trust the Chinese car with your life? I think, well, if it's pure FSD, I wouldn't trust any car other than Tesla. If it's pure, I personally have gone on the record as here's the litmus test for if you would actually pay for FSD and trust FSD. Let's say you had a newborn daughter. Would you allow your mother and your newborn daughter, when they're coming back from the airport for some reason, to get into this random robo-taxi and drive 30 minutes to come back home? So you got the grandma of your child, you've got your child, you've got your own mother in a car with no driver. I think if someone said, hey, Amit, this is ready to go, or would you be willing to, let them step in? And by the way, the car is free. We'll pay you. We'll pay you $1 million to take this, to let them take this drive. I would say no. And I think a lot of people in the chat would say no, because no one wants to be the freaking guinea pig when this is rolling out. I don't think anyone wants to be, even if people are super bullish on robotaxi. I'll wait till, 20 million people do it and there's enough data to say, all right, only 0.01% of that. Now the argument's gonna be, well, it's less safe when you have a driver in the car. And theoretically, yes, over the next decade, if AI FSD cars become real, it will become more safe via robots and cars and AI and all that stuff. The problem is I can get a 5-star Uber driver that is probably had very little crashes, if any, and I can reduce my chances so significantly than a brand new FSD thing that is just going live to probably not have my mother and my daughter die. I wouldn't. So for me, I wouldn't trust Tesla. I wouldn't trust the Chinese car. I wouldn't trust any car with FSD. And I think Tasha spewing this FSD robo-taxi nonsense, the reason it's nonsense is because it's not happening. And, Tasha has a big position in Tesla via ARK. They have to pump the stock right now. They have to, investors have to be able to justify buying ARK's fund. And the only way to justify buying ARK's fund is if one of their top 3 holdings doesn't shit the bed. And right now it's shitting the bed. And these numbers just aren't that good to justify, what they're trying to sell. So we'll see. We'll see what ends up going from there. Lena says, IDK, people probably can't drive. Look, I'm not saying human drivers are the best. I'm just saying I agree with Mario. The FSD videos are scary, dude. It's so weird. The people I talk to that are like, yo, I can't wait for self-driving cars. I'm like, why? Like why? What is so special about sitting in a car and not having to drive? Like, yes, I know it's a little bit more relaxing, but unless it's 1000% autonomous, you have to pay attention. You have to keep your hands on the wheel to some extent. You have to know what's going on. Like, there's no way that it's just purely autonomous. And if it is going to be purely autonomous, it's going to take a long time to get there. So I've never been enthralled by this concept that the car can drive itself and I'm sitting, on Twitter on my phone. Like, I would be too scared to be comfortable in that position, much less have loved ones in that car that are comfortable. That's not my bull case on Tesla. My bull case is the bot and the energy business. Obviously, I'm bullish on the EVs, but I'm not bullish on FSD necessarily scaling very soon. Tesla needs more cars on the road for FSD to scale faster. Yeah, Sonny, that's a good point. Adding to some of the bearish thesis on this earnings report, if the volume production and deliveries of cars is notably lower, which is management's quote verbatim from the earnings call, than 2023, you have less cars on the road producing less data, which means your AI is being traded in a less significant way. Now, I don't know how bearish that is because they have so much data already. They have more data than everybody else, and they have years of that data. So I'm assuming they can still build their models in a sophisticated way without needing like a vast trove of data continuously coming in. But maybe I'm wrong on that. Maybe they just need more and more and more and more data. And if you have less data, the network effects around the facilitation of those FSD training videos just become lower, which means the progress becomes lower as well. So Inbound says FSD 12 is the real deal. Yeah, see, I just can't believe that until, thousands of people are using it every day and paying for it and like not getting into crashes. It's really hard to justify. And look, I give no shit to Elon. This is a hard thing to do. This is a really hard thing. This is not an easy thing to do. What Elon's doing is one of the hardest things in the world. And thankfully, he has investors across the world that are interested and believe in him enough to give him, the capital to execute on this mission. It's a really tough thing. But there's no way that it's something that's just going to happen out of nowhere, right? It's going to take time for this thing to reasonably play out. There are a couple things I wanted to look at. We got a bunch of different things here. Let me, again, if anyone wants to join and talk a little bit about Tesla, you can join in the chat. You can voice your thoughts and opinions, bearish or bullish. And we can talk about that. That StreamYard link is in the chat. Says verbatim gets the meaning totally wrong. No, verbatim just means word for word. I think I got verbatim means if they said it's going to be notably lower, verbatim means word for word. So notably lower is word for word. We take vocabulary seriously on this channel. Okay, we do a word of the day. By the way, the word of the day today was damn. I say we take vocabulary seriously, and I forgot the word of the day. It was gully washer, which means a heavy rainstorm. So for anyone who's never heard of that word, which is probably all of you, gully washer means you're in a heavy rainstorm. So next time you're in a heavy rainstorm and you got some friends with you, just be like, guys, this is such a beautiful gully washer. And they'll look at you and be upset, but you'll know that you know more words than them. Amid people who have not driven a semi-autonomous vehicle should not comment on how popular this feature will be. I don't know. I think in general, you can have a bird's eye view perspective on how we think about semis. But we'll get back to in a second. I'm getting a call from Steve, our favorite analyst. Let's see. Oh, I missed this call. He's asking for the link. Okay, so let me send Steve the link. Yeah, Steve, if you're listening, I'm sending you the link right now in Gmail. We'll get you on and we'll talk about your thoughts on this. While I'm sending him this link, I do want to talk about Hertz. In the morning, we talked about, did Hertz make the wrong decision in 2021 buying 100,000 vehicles, or is there actually global EV demand stalling? Steve, I just sent it to your email. I think Hertz actually made the wrong decision because the logic I had, and this is not a global EV problem with Tesla, even though demand still may be suffering, given what we saw from the earnings call today, is that most people are not likely to drive a Tesla when they get to a new state and they need to rent a car. So I was in California last week. There was no way in hell if Carlos didn't pick me up and we drove in his Tesla that I was going to drive in a Tesla because I'm just kind of scared to drive in a Tesla. I don't really know how it works, right? So I can pick up any regular car that's a gas-powered vehicle and probably be okay. But on a brand new, like the Pacific Coast Highway, I'm not going to pick up a Tesla, even if that would be fun, because I don't want to get into a car crash if I don't know how to work the Tesla. So from that perspective, Hertz probably overestimated the amount of cars they can get. It was low interest rates, no interest rates in 2021. So they were like, all right, fuck it, let's just do it. And that's why I think they had to sell off 20% of their fleet. I don't think it's because people generally hate EVs. I think it's just because people, when they get to, Texas and they don't know how to drive an EV, the first thing they don't want to do is hop into an EV. So that is the reason for the Hertz thing. I don't really think that's necessarily a Tesla problem per se. All right, we got Steve on with us. Steve, you are a new Tesla shareholder over the past 2 months. What was your thoughts about this earnings?
Not great.
Okay.
But this isn't why I became a shareholder, so I kind of don't care.
Okay.
This is about what he says on the conference call today. At least for me, it's about the 25K vehicle not screwing margins even further than they are and more clarity around the bot. I mean, there are things to be concerned about in these numbers, just going through them very quickly.
When you mean concerned, is this a demand argument? Is this an automotive?
No, I mean, margin, obviously everybody knew margins were slipping, but this is pretty big. And when you look at just the quarterly numbers, I mean, give me 1 sec. Let me pull up the slide because I didn't memorize it.
I mean, it's definitely not good growth quarter over quarter. Yearly, it's better, but quarter over quarter, it sucks.
I mean, look, everybody was making such a big thing about the energy generation storage business, and you know that I've said this is a nothing burger because it barely produces any money, right? I mean, it went down.
It's growing.
It went down quarter over quarter.
Yeah, but it's growing 54% year over year. I get a quarter over quarter. That could have been like a season.
Year over year, look at a quarterly basis. It grew by 100 million year over year.
What, in revenue?
In revenue, yeah. Go if you're looking at the slide deck, go to slide 25 and look at the statement of operations broken out by quarter.
Okay, let me show.
It generated 1.31 billion in revenue 2022 Q4 generated 1.43 billion this quarter.
I see it right there. 1.3 billion Q2 or Q4, 1.43. Yeah, I see what you're saying.
And the cost of generating that revenue was basically flat, went down 2 ticks. Like, this is a nothing burger. It barely hits gross profit in the bottom line. And everybody's making a huge deal about this. This is a nothing burger for the business. I mean, and when you look at the automotive revenue, it's not really growing that much.
Oh, it's not growing at all.
Down.
Barely growing. No, it's right. Granted, it's growing off a tough base. It's hard to. Well, let me ask you this question. Okay, so you didn't invest in Tesla because of the cars. I mean, you've been historically pretty bearish on the valuation from a car perspective. You invested because of the bot. I mean, that's
the valuation today is not great, but this is a great base for the future of the company. So I want to be very clear about that. You know what I mean? Like, this is a company that's generating over 10 billion in pure profit on an annualized basis. This is a great foundation. This is a great company. If he doesn't come out with a really bullish thesis for the next couple of years where we're done giving away margins, we are done squeezing ourselves into oblivion, we have a much better product than everybody else, these are going to remain the margins, we're going to create a sub 25K car to clean out the rest of the space, and bots are coming in 2 years, the stock goes up tomorrow. He doesn't come out and hit on those things, I don't know.
Okay,
and I don't think FSD is a big thing because it doesn't matter what he says, it matters about government regulation on it.
Yeah, so I want to hit on a couple of those things. So I have a couple questions. They had a quote in the shareholder deck. You might have heard it or not, but they said our volume of growth of vehicles in 2024 will be notably lower, maybe notably lower than the growth rate achieved in 2023. They did 1.8 million vehicles. What do you think notably means? Do you think it goes to 1.5 or below?
It's covering their butts. It can mean anything. Well, let's not speculate. It could be a tick higher. It could be a couple ticks lower. I mean, I don't know.
Do you think that's concerning, or do you think that's just something they have to say, given they don't know what's going to happen with interest rates and geopolitical issues and things like that? Or do you think, my question here, Steve, is do you actually think there's a demand problem to the point where they can't produce?
I think I think the EV story is overblown. I don't see mass adoption. I live in arguably the heaviest populated area in America. I mean, it's either where I live or LA. Pick your poison of what's more densely populated. I don't see Tesla dominating the roads. I mean, you live in a heavily populated area. Do you see Tesla dominating the roads?
Well, in the suburbs of Jersey, because there's so many fucking Patels, there's definitely a lot of Teslas. So
okay.
But I see that. But I think there is a demand problem for a lot of other EV makers. I don't think there's a demand problem for Tesla. The problem is, I think there's a competition problem in China, which is where where all the growth, or 25% of the growth is coming from, right?
I think you got too many people like me that says I have no interest in getting an EV until I can charge it in 2 minutes.
Yeah, well, that's fair. Okay, let me ask you this. BYD, I don't know how much research you've done on them, but do you think that's a serious threat to Tesla?
I don't follow them. I mean, from what I know about them, they're a threat. I mean, look, this is a great base going forward, but I think that this really shows that there is a ceiling to what they can do with automobiles. And these other businesses need to come on board for this thing to really stay in the Magnificent Seven.
Yeah, someone was teasing today. There's an article that said we should put Netflix in the Magnificent Seven over Tesla. You wouldn't go that far, would you?
I mean, I may.
Steve, don't fuck up this answer, Steve. I want to get you on record. You would not put Netflix over Tesla in the Mag 7, correct? Steve, don't hesitate on this answer, Steve.
After what they did with the WWE, and I can foresee what they're going to do with sports and everything else.
Steve, you don't have to be contrarian to make the stream more entertaining. You don't have to do that. We're all sophisticated here. You don't have to.
No, I mean, I think there's a good argument for it. And I told you that if any one of these companies was going to fall out, it could be Tesla or Amazon. And I don't know. we got to see. It's too early. We got to see what he says on the call. Look, he could get on that call and deliver some big news, and this whole earnings report could be a nothing burger.
Okay, let me ask you this question. Tasha from ARK was just on CNBC, and she said her response to this earnings was robo-taxis will be coming and everyone's overlooking it. What are your thoughts on
robo-taxis? The stupidest thing I've ever heard of.
Out of all the things you've heard of in your life, is that actually, I mean, you've been alive for a while. Is that actually the stupidest thing you ever, like mint chocolate chip?
No, it's not the stupidest thing I've ever heard, but it's not smart.
Why?
Now, if they phrased it as, we're going to build a robo-taxi network and we're going to take Uber out and we're going to operate our own fleet of autonomous taxis and generate reoccurring revenue 24/7, I think it would be absolutely brilliant. To say that, oh, everybody who buys a Tesla is going to be thrilled to rent out their car while they're not using it is dumb. Nobody that I know that owns a Tesla, and I know quite a few people that have Teslas, would even be interested in doing that.
Let me ask you this question about FSD itself. I asked this question to the chat. Would you let your wife get into a car and just let it take her to the airport? Would you be comfortable at this stage being kind of the guinea pig for that? Or
I wouldn't be a guinea pig, but that's what will get me to buy a Tesla. Like, and I've said this before too. When a car can drive me around and I can sleep or read the paper or write emails and not have to pay attention or watch YouTube or whatever, I'll buy an EV. No problem. And I'll overlook the whole charging thing. But until that or charging occurs, I have no interest in changing. And I think FSD only becomes real when government regulation lets it become real. He could announce the new FSD is coming out next month and fully autonomous is here, but are you actually going to be allowed to use it? That's the question. Like, what good is it if you don't have regulation that says you can use it? Like, there's so many other things. Like, think about this. From an insurance standpoint, if FSD is not regulated, what happens if you have FSD on and you get into an accident?
Yeah, these are very gray areas. These are very gray areas.
Like, there's a lot of gray areas that need to be cleared up before this can really take off. I mean, I think that even if it comes out in 2024, for people to actually pay for it, I think there needs to be clarity on if they're allowed to use it and what happens if it screws up. Who's liable? Like, I think there's serious concerns. You know, this isn't bringing a new soda to market. This is life and death things.
Let me ask you this, Steve. You invested because of the bot, so you want to hear about the bot today. What do you want to hear?
Most important thing.
What do you want to hear on the call, given the earnings has been a little
So he said around 20,000 is the price point, and he went on something the other day, I don't know where I read it, and said that he backed up somebody's statement that there could be 1 billion humanoid bots by 2040 or something like that. I mean, really think about that. We went through the numbers. I'm really bullish on the fact that a $20,000 price point, if you can amortize that over a 5 or 6 year period and have that be $250 a month to get a bot, I think a lot of households are going to have one to do the mundane tasks that you just don't want to do. And I think that there's going to be a reoccurring revenue service package so the bots get smarter and they learn from each other 24/7 as more tasks get done. There's huge applications in manufacturing and in other areas. I think the bot has so much more potential than the car business at this point. I think it's going to be bigger than the car business.
But if it's going to be bigger than the car business, and the car business is doing about 100 billion in revenue right now, it needs to happen. Like, it needs to be in operation in the next year, 2 years, right? At least it needs to be selling, right?
Yeah, I mean, I would hope that they're going to bring it to market in 2 years, 3 years from now. Definitely. I mean, look, I bought this with a 5 to 10 year horizon because of the bot. And if Elon's right, if these people are right about how much adoption we're going to get in robotics over the next 20 years, you want to be in something like Tesla or General Dynamics because they're going to be the front runners of this. And I think Tesla could be the front runner in the consumer space because of the brand recognition. And just look at the dexterity in the hands. If that can fold, do laundry, and clean the kitchen and the bathroom, I think you'd be surprised how many people are going to get it, in addition to companies. And I think cleaning companies are going to adopt utilization. Like this has a whole slew of pros. I think it's going to destroy workforce also. But from a shareholder perspective, this has tremendous value proposition.
Okay, so basically you're saying that's where management needs to talk about. Yeah, I think they need to focus on energy and the bot, primarily the bot, because the automotive business, especially, we haven't even gotten.
Why talk about energy? Why?
Well, I mean, it's growing at least. I know it's not insane, but it's something that they can point to as.
I'm doing the numbers right now for the whole year. Why you talk?
It's growing more than the automotive business. Obviously, the automotive business is doing more gross revenue, but I think it's something they can point to. I mean, there's this thesis I've been thinking of that lithium prices are down 80% year over year. They have a shit ton of land they just bought in Shanghai. This is the time for them to take advantage of cheaper prices and really build out the battery packs that they want to do. Obviously, Ross Gerber talking about that 4680 battery. Until those things start getting really vertically integrated, we don't see massive energy growth, but it will happen. Like energy is something that I know you're a big oil guy, right? So maybe you're a little biased here, but still, we do need renewable energy, and it's got to happen. It's that we definitely need those battery packs to make this happen. Solar is dead for like the next year until rates get cut. So I think they should at least focus on it, give it some lip service. But I don't know how you get through the call and give a bullish sentiment if you don't focus on energy in the bot, because you can't really focus on margins and volume because you already said it's going to be shit. So investors are not going to believe
Have you looked at the energy generation and storage? Have you actually looked at? It's not growing.
No,
like,
I think
don't be fooled that it's not growing. Go to slide 25. Okay,
no,
it may be growing on top line revenue. It's not growing on.
So energy generation and storage revenue year over year is growing 54% in top line revenue. That is correct. 3.9 billion in 2022, 6.03 billion in 2023.
Like it's down quarter over quarter on gross profit.
I get it. I get that. But, you know, at least we got some.
I mean, yes, you do have top line growth. You do have bottom line growth on it. But, I mean, this is
let me get someone else here as well. We got someone in the background. Semjon, you're live with us. We're talking about FSD, the bot. Thank you for being here. And you can ask your question or make your statement.
Hi, can you hear me properly?
We can hear you. Yep, you're good.
Okay, my question was more towards you, Amit. You're bullish on the energy sector and the bot, but don't you think the software used in FSD is indicative as being used in the bot? So if you're bullish on the bot, there must also be FSD.
That's a good question, Steve. I'll let you do this one. So the argument is, well, if you're bullish on the bot is going to be powered via the AI in FSD. It's actually a really good question. If AI is powering the bot and they're using the AI from FSD to power the bot, if the bot's going to come out soon, so will FSD. So wouldn't that be a bull?
But once again, you need government regulation to use FSD. You don't need government regulation to have a bot work in a warehouse. Like, it's two different things. Yes, they're powered by the same thing. And even if FSD is ready next month, can you use it? Like, that's the biggest thing. Can you use it? Can you drive around New York City with it?
Yeah, I mean, look, I think that's a decent argument.
And I'm not saying can you, where will it work? I'm saying legally can you, is what I'm saying.
Yeah. Semjon, are you bullish on FSD? Is that kind of your big? Are you a Tesla investor? Is that your thesis?
I am an investor. Well, I mean, FSD is, I could say, robotaxis are maybe far away, but you can see the progress they're making, and I mean, legislatively, it should be approved. And if a robot is allowed in a house or in a working place, why shouldn't be a robo-taxi allowed on the road? I mean, a robot could strangle you. It's a crazy idea, but
okay. So let me pose that to Steve. Steve, his argument is a robot could kill you. So why would you be more bullish on the bot over FSD? It's a reasonable question, right?
Yes, if we think the Terminator situation is going to happen, then we're all screwed anyway in the next 20 years anyway. That's Chris's case. He said to me, why would you even consider buying one of these? And what I said to him is, if I don't have one and this happens anyway, we're all screwed anyway. So I might as well reap the rewards of having to do less stuff in my life.
Yeah, that's fair. All right, Sam John, thank you for being on. We'll get you on next.
But
Go ahead.
But isn't driving, if you don't have to drive, isn't that also doing less stuff?
And I agree with you, but am I allowed to use it? I'm not saying that, like, look, I want FSD to be real because that's my dream of not having to drive. The difference is, even if Elon comes out tonight and says, we're good next month, FSD, ready, we're here, we're going, that doesn't mean that you can legally use it and drive around with it. That does not mean that. Like, that does not mean that you can go lay in the back seat and take a nap while it drives you around.
Yeah.
Like, you need government regulation, you need laws around it for it to be real. And that's where you'll see mass adoption of it. When you have those laws that you can legitimately lay down and sleep while a car drives you around, that's the inflection point of everybody who has a Tesla. There's a real chance that they pay whatever it is a month for FSD. But until then, you're not going to get mass adoption of it until you can actually use it legally. And the wheels of government turn slow.
Can I have one last question?
Yeah, go ahead.
Steve, how long would you think, if the FSD comes out tomorrow, how long do you think it takes for it to be approved?
Who knows? I mean, they couldn't even figure out crypto, right? So who freaking knows? They still can't figure out crypto. I mean, you're going to have debates, you're going to have hearings, you're going to have experts, you're going to have this, you're going to have that. Who knows? I think it would be, I don't even know how to answer that. I don't think it would be a month or two. Let's just say that.
I think you're saying there's no regulatory framework or even concept of a framework to implement.
No, they got to build it. Think about how long it's going to be for them to build it. This isn't going to be quick.
Yeah.
And then you got state issues. Forget federal issues. Then you're going to have state issues.
Semjon, how big is Tesla position in your portfolio?
Not big. It's my main portfolio is Palantir.
Okay, so Palantir is bigger. Okay, cool.
Yeah.
I like you.
Much bigger.
I really like you now. I really like you. Awesome. Thank you for joining, man. Appreciate it.
No problem. Bye-bye.
Okay, Steve.
And energy is 6.5% of their gross profit right now.
No, I know it's not a large portion of but it's growing 54%. That's the only thing I'm saying. It's at least growing better than 50%.
Yeah, top line.
Yes. I mean, look, you got to sell a narrative. You got to sell a dream right now on this.
No, I don't have to sell anything. I'm being realistic about the numbers.
Okay, I want you to respond to this comment. Huang family says, "Go away, Steve. We have plenty of you walking around the streets who still miss the Nokia and the Blackberries."
You don't like the keyboard of the freaking BlackBerry? Really? Are you kidding me? That was amazing.
It was pretty cool. Yeah,
it was amazing. It's like, go away. I'm a freaking shareholder and I'm buying into the bot vision. I think the bot's going to be bigger than the cars. But it's like business 101. You can't just keep squeezing your margins to hurt everybody else, because eventually you diminish your profitability. And until these other areas of generating revenue come true, you need to have the spigots turned on for profits. Like that's what people seem to not forget. Like you can't just keep lower. And let's not forget, he cut prices 4 or 5 times this year, I think. If you bought a Tesla a year ago or a year and a half ago, and then he cut prices over those cuts by, or would say arguably 30%, you're pissed off because your resale value came down. Yeah. Like the car that I purchased, if Audi came and freaking cut 3 times after I purchased it in a year, I'd be pissed off because that means my resale value went down. Like that's crazy to think that you're not mad at that if you're an existing buyer.
Why didn't you buy a Tesla? I mean, you're pretty wealthy. Why didn't you pick up?
I told you why I didn't buy a Tesla.
Because the range.
I'm not buying an EV until I can charge it in 2 minutes or it can drive me around. There's no reason for me to own
a lot of people like you around the world that feel the same.
Yeah, and I'm not saying that they're not good or anything. It certainly will do everything I need it to do, but I don't want to be held to a 30-minute charge or whatever it is. I also don't want to have to remember. Like the nice thing is if I forget to put gas in, I can pretty much go anywhere and in 2 minutes I have a full tank.
Yeah. That's fair. That is fair. So you think that they have to talk about the bot? Well, here's another question. Are you buying the dip or at below 200 or you got to see something on the earnings call before you buy the dip?
No, I'm buying regardless. Let's see where we're at right now.
You're buying regardless. So nothing in the demand side of the.
I mean, I bought yesterday.
Oh, okay. You bought yesterday.
I think I bought 5 times in the past 2 weeks.
You bought 5 times in the last 2 weeks.
On the way down. Look, I'll buy tomorrow, and unless there's something in the call that completely like makes me go crazy, yeah, I think that I want it to dip. Like I want this to go to 150 or 125 so I can just buy more, because I do think the bot's going to be so huge, and I do think Tesla would be better off quitting the whole robo-taxi narrative for people to rent out. And I think they should shift the narrative to building their own taxi fleet to generate reoccurring revenue. Because think about how big Uber is. They could take Uber out pretty quickly, considering they already have all the data on mileage and they already have a mapping program.
Huh.
Like, I think that's a much bigger bull case than automatically assuming that people are going to be willing to enter their car into a freaking taxi service.
General Weenus says Steve is just saying the truth that Tesla shareholders don't want to accept or think it will eventually be a non-issue.
Thank you.
Yeah, I mean, look, I think at the end of the day, the automotive business is not struggling, but it's definitely not growing as much as people thought it would. And there have headwinds until rates get cut. Now, when rates, well, let me ask you this question. When rates get cut, do you think regardless of how fast the business is growing, the market front runs Tesla stock?
Yeah, when rates get cut, it's going to be bullish for Tesla. There's no question about that. The question really becomes, though, is he going to cut costs again? Is he done trying to destroy everybody else? You know, I think where cars are right now, if he can get a sub 25 car out there with these margins, they're golden. But he can't just keep cutting top line prices. I mean, he can, but then he loses his competitive advantage against everybody else.
Yeah, I mean that's their way to definitely get people to come in. Someone says my biggest problem is that if you take out credits and tax benefits, Tesla business didn't make a profit. Is that true? Can someone confirm?
I didn't look into it that deep. I'm going to look at it when I get home, but there's definitely a chance. You got to look at the EV credits.
Do you think that's bearish if the EV credits were the reason for profitability, or do you think that's just part of the sector they're in? And that's
it's only well, look, it's unfair to say if it's bearish because they happen and it's real profit. The problem is what happens if they go away. You know what I mean? Like Ford doesn't have that problem. Volkswagen doesn't have that problem.
Yeah.
So, yeah, I got to get going because I need to drive home now. The traffic's a little less.
You're going to drive your Tesla home, right?
I'm not. I actually have a rental. Funny enough, I'm driving a convertible Mustang right now. That was a rental car they gave me. Very fun.
Have you driven a Tesla or no?
Have I driven? Yeah, I've driven. They're awesome cars.
Okay.
They're awesome cars. But if you want to discuss this later, let me know.
Yeah, hop on Finance Junkies. We'll have you on tonight. If you want to...
All right, I'll talk to you later.
All right. Thanks for joining. Tesla's down 45% since November 8th, 2021. Rivian is down 81% since November 8th, 2021. NIO's down 85%. Lucid's down 94%. And Fisker is down 95%. One could argue there was a bit of an EV bubble, given these stocks are down pretty significantly from November 2021. Obviously, all stocks November 2021 took a hit, but many of those stocks have gotten back to their high. I mean, which is why maybe we're in an AI bubble. You know, Microsoft, Google, Amazon, all of these guys were at the top in 2021. They took a beating. Meta obviously falling from $400 to $88. Meta got back to $390 today. You know, so these stocks came back over the past 2 years. Tesla's 3x their revenues and they've stayed flat. One could argue, at least the stock price, that the company has justified their valuation by growing 3x, but not necessarily proven that the stock price deserves an increase in the valuation, at least so far. We'll have him on in 15 minutes and we'll see what Elon has to say. Safe ET says, in the UK, it will be the insurance company that has to cover the cost of an FSD accident. Yeah, that is that's a good point Steve brought up. It's a very gray figure about who the hell is in charge of all this stuff when it goes to shit, right? When you have an inevitable accident, is that the EV market? Is that the insurance company's fault? Is that your fault? Especially when, you know, is that Tesla's fault? Do they cover that? And these are things that will get resolved eventually, but we just don't have the best answer to it yet. And if we don't have the best answer to it yet, then it's hard to necessarily say that this is going to be super easy and that this is going to, you know, resolve itself. We got Dan Ives. Let me get him on. He was talking right before Tesla earnings. So let's just see what he expected, and we'll see what he has to say before. Ian says, can I just say a massive thank you for the quality of these calls? It is really appreciated. Let me take a chance to say thank you, everybody, for joining into the call. I mean, it means the absolute world to me. 584 people here. Your time is very valuable, very precious. And, you know, we're this is about a year of covering these live streams. We're trying to get better and better and better on this channel. So hopefully we make it worth your while throughout the entire tech season earnings that we have over the next month and a half. So thank you all for joining, and hopefully get more guests, make it more exciting. The analysis good, and keep it going. All right, here's what Dan Ives had to say right before earnings on what he expected.
We're back. Tesla shares lower ahead of the company's Q4 earnings. Great to be here. So I'm not sure if you heard Bryn Talkington a moment ago, a shareholder, big believer in Elon and Tesla, and yet she says the most important thing she's watching is all about Elon. Not pricing, not margins, not market share, not this, not that. It's all about Elon.
Look, I mean, he definitely, you know, you can't put the sort of issue back in terms of what he talked about with AI, 25% ownership, and that's definitely caused some nervousness out there. But and that'll be something I expect him to sort of reiterate, that he's committed to Tesla. He's not going anywhere. I think that's something that's important on the conference call to hit. But no doubt, the margins, the price cuts, that I think is front and center for many investors.
Okay, so let's take those. Margins, are they going to be hurt by more price cuts?
Look, I mean, look, we believe coming in that 90-95% of price cuts were done. They've continued to cut prices.
You've told me that like 3 appearances ago.
Yeah, and look, and the problem is that, you know, as they continue to cut margins, last year it was the right move. This year, you got to hold the line. I think you could have around the edges some price cuts. They need to draw a line in the sand that the vast majority of price cuts are done. You're going to have a sub $30,000 vehicle, we believe, over the next 12 to 18 months. And I think that's the important thing. You cannot keep giving away that margin advantage. That's the important thing that we believe they ultimately do line in the sand this quarter. And I think that's something that the streets focus on.
He's like he's in a price war with the Chinese, right? I mean, he's already losing or has lost the lead there. So where does this go from here?
I mean, look, in China, this was a record quarter for Q4. So the one thing is, from a demand perspective, that poker move is paid off. I think now when it comes to Tesla, the focus is 2024, you can't continue to cut prices. And I think if margins start to trough, and they talk about that and upticking from here, I think volumes 2.1, 2.2 million, then at that point, I think the bottom is in for the stock.
What if the new reality here is just lower priced vehicles from Tesla going forward? And that's just the way it's going to be. Because in an environment of slowing EV uptake, I think it slowed more than people thought. Yeah. Now he's in this battle in China with the competitors there, that there's no other option.
Yeah, and look, and I think for the recognition now, you've definitely seen Bloom come off the rose for overall EVs. We've seen that globally. But the question is, do you want to own a Tesla or do you want to own an EV? I still believe they continue to own the market along with BYD. But now you got to you really have to hold serve in terms of what's happening from a price perspective, because this is all, in my opinion, the reason that we're long-term bullish. It's just the start of the next phase of the Tesla story in terms of autonomous, FSD, the rest of the Tesla story. So we are going through, I view tonight, it's a moment of truth. I think it's going to be a moment of truth. Well, it's a moment of truth around margins. And I think I think investors' frustrations built. We've seen that especially the last
You use that a lot, the moment of truth. I mean, maybe investors are getting sick and tired of waiting for this. And why also has the stock over the last 3 earnings reports the day after traded down near 10% in each occasion?
Well, it goes back to the last few quarters. You need good communication on the conference calls. Last conference call we talked about, it was a disaster. We talked about those moment of truths, but you haven't had the inflection point. And even though the stock worked last year, this is important for the next phase of the Tesla growth story.
I don't know what the inflection point is that Dan's talking about, because if it's FSD, I mean, that's not necessarily I would say, ready yet. If it's robotaxi, it's definitely not ready. If it's the bot, it's definitely not ready yet. So I don't know exactly what he means by we're preparing for the inflection point.
You need adults in the room. I expect Musk to step up tonight, and I do view this as an inflection point rather than the start of a negative cycle.
You've had to, on occasion, like anybody else, whether it's us in the media or investors or an analyst, decide what he says in certain occasions is like legit. Like, should I take him at face value, or is he just throwing something out there on social media, like the 25% thing? What am I supposed to think about that?
So I think the 25%, I mean, and we talked about it, it's something where it's an issue from an AI perspective in terms of a big part of the Tesla story. But right now for investors, you don't want to see Musk adding uncertainty and some sort of, issue with the board. And that's why I think that's a little more talking rather than action. But that's why it's when he talks to investors, he needs to lay it out in terms of I'm here, I'm committed. The price cuts was a 2023 story, not 2024. We're gaining share. China's strong. If that happens, then this is a stock that starts to significantly reverse from here.
Power E-Trade's easy-to-use tools make
All right. Well, we got about 9 minutes until this earnings call happens. Thank you, everybody, for being here. Look, I think Dan Ives is making a weird argument here. His point is that this earnings call is a moment of truth for investors on margins. The company in the earnings deck has not decided to comment on the 2024 outlook for margins. They also decided to not comment on 2024 outlook for delivery in terms of specific numbers. And, maybe we'll get those on the earnings call. I think that's the big thing to look for. But if we don't, then I don't know what moment of truth is there. It's going to be hard to imagine a moment of truth. Artist here, thank you for being here. What accent is that? We got the Dan Ives accent, as always. He always enunciates every syllable. That's why I like listening to him as well. I don't know, dude. I don't know where the narrative. It's going to be a fantastic earnings call to try to understand how they psychologically. I mean, they're essentially in a war room right now trying to figure out, okay, how do we justify lower margins, lower delivery, energy business that's growing, but obviously doesn't contribute that much to bottom line profits, and still make a case that there's all this potential, whether it's the robo-taxis or the bot, which are like the two bigger things for potential, that can make the company worth more than Apple and Saudi Aramco combined, which is what Elon has been saying over and over. And look, I don't think it's a bad thing that Elon has said this over and over and over, because he has to say this. He's the founder. He has to sell that vision. He's got to do what he has to do. And he's executing, really well against it. He can't control the fact that the Fed raised interest rates, right? Like that, it is what it is. But in terms of valuation, a lot of the bears, have argued that it's just a bit too pricey for the growth and for the short-term potential, not the long-term potential. The reason Tesla is not like $150 or $100 is because there is a certain amount of global, institutional, and retail investors that fundamentally believe there is an asymmetric return waiting in the multiple S-curves that are forming within the infrastructure of the technology the company is using that have yet to play out. And they believe they're early, including myself, before those things play out. But until those things play out, you've got to deal with the hard level of just like pure valuation. And right now, pure valuation is tough. I don't think, though, that you should replace Tesla in the Magnificent Seven by Netflix. I don't think that's the case. That would be hard for me to imagine. Toro Market, I see you. Oh, you're there, right there. Okay, you're up. What's up, man? How are you?
Oh shit! You got me on so fast, so really fast. I was going to tell this to Steve, but he's gone. So I think that one of the reasons they're gonna can you hear me well?
Yeah, you're good.
Yeah. So I think one of the reasons they want to first develop the compact car in Texas is because the production line may incorporate some sort of use case of the bot. So my bold prediction is that the bot initially is not going to be able to walk, but just like we have all these huge robotic arms that are used since 2012 to move heavy stuff on the factory, they're probably gonna have the half body of the bot using the hands in some sort of the process of the compact car. And if you look one of the previous presentations in which they talk about this new assembly line system, the unbox or whatever they call it, they show 5 people around the assembly line. I don't think you want to have more people there. So I think it's the bot, and that's why they're gonna do it first in Texas and then translate that to Mexico or whatever.
By the way, we got the chat saying, "Are you Dexter? Did you just get done killing your wife?" Or
No, I'm cutting mice tissue and to do staining later. But yeah, this is my hobby and stock is my passion, I guess.
You're still getting your PhD, right?
Yeah, third year now, finishing. And I start doing an MBA actually at the same time for free.
The PhD, if I'm not wrong, biochemical engineering, correct?
Biomedical engineering. Yeah.
And
you remember, huh?
Yeah, no, I remember, dude. That's insane. That's incredible. Okay, so how do you feel about the margins and the outlook that production will be low? Do you really care about that as a long-term investor, or how are you thinking about
it? So I think the margins is so this whole story of the margin is what it is. What it is, we are in a tough macroeconomic situation. I think eventually Tesla will be able to pull a bunch of levers, especially they're like going to be doing their own refinery of lithium in Texas. This is like 2 years in the future or whatever, but as macro improve, trade cuts go down, I'm sure margins are going to improve. If you compare the price of a Tesla a year ago and you look the interest rates, the price is basically the same, right? So, as investors and analysts, they like to look every quarter and focus in the details. But if you look the macro picture, this is just a rough time, and I'm sure they will be fine.
Okay, on this earnings call, do you think Elon is going to say something that... Oh, Derek Wall. Hold on one second. Derek Wall, thank you for 50 memberships, dude. Really, really appreciate that. That means a lot. I think when someone gifts a membership in the chat, you can just take the membership and you become a member of the channel for like $5 a month or something. I don't know how you do it, but you can easily grab them right now. Thank you, Derek. That means a lot. Derek's a big Tesla investor, a big Counter investor. This guy's just an OG. Just look up Derek Wall LinkedIn and you'll find out this guy is one of the most elite investors and just executioners and operators of business of all time, in my opinion. So if you guys don't know who Derek Wall was, definitely check him out. This guy's absolutely incredible. I'll also put his Twitter in the chat for those that want to check him out. This is a guy, if you care about business, you should follow him just by the sheer humility of what this guy's been able to do in business. So I'm putting his Twitter in the chat. Okay, what do you think Elon's going to say on the call? Do you think he doesn't care about analysts and all the stuff he's been saying over the past couple of weeks, obviously going on rants on Twitter, or do you think he's going to be more reserved given everything that's happened?
I guess we have to see what kind of Elon we get today. We have like 10 different type of Elons, depending how he wake up. If he's happily and joking, maybe he will be more careful with what he says. He's demanding now for more shares, or he will go someone else. I didn't like that comment, but just Elon stuff.
If you were an analyst, what would you ask Elon?
Oh wow, I will want to know the development of the compact car, and also
that would be your biggest question.
Yeah, that and also like regarding margins, I will frame the question in a way that I'm aware of macroeconomics, but at the same time I want to know what special or specific things Tesla can do to improve margins, because they're always optimizing every manufacturing process. I would like to know more about the refinery.
Okay, and last question for you: are you at all concerned about competition and global EV demand slowing down, or you think that's just like a mainstream media narrative that really doesn't apply to Tesla?
I'm concerned about China competition. BYD, we know they don't have. Okay, every Uber, Tesla Uber bull is gonna be like, oh, they car are shit. Yeah, but they are sexy. They have shit ton of screens. They are selling EVs and they are selling hybrids at the same time. We know that China is the toughest competition Tesla have. So the only thing I'm worried right now is China. If they can. They're bringing Cybertrucks there now, I guess, to create some sort of halo effect. Those Cybertrucks will bring Ives, and eventually people are gonna buy Teslas. Hopefully, they bring their Model Y refresh to China also, like a new Model Y refresh or whatever. In terms of Volkswagen or other companies, I don't think they have compelling EVs right now.
All right, thank you, sir. Appreciate you joining. Means a lot. Thank you for being here. Talk to you next time. Bye. Thank you again, Derek, for the memberships. How do you get a membership? Honestly, I don't know. I think you just like grab it somehow. It's like Pokemon or some shit. You gotta grab. Drew Cameron, thank you for becoming a member. I don't know how you get the member, dude. You have 50 of them waiting for the 50 first people who grab it. So thank you, Derek, for that. Again, putting his Twitter in the chat. This is a guy you really, really want to follow. I mean, this guy, just his execution on business is absolutely incredible. All right, earnings call in 1 minute. A membership means you join the channel and pay $5 a month. I never really mentioned it. I just turned it on a while ago, and it's just to support the channel. It's nothing too crazy. So for $5 a month, you can support the channel, and Derek gifted 50 of them. So 50 people get to join the channel for a month to be a member. Click on it and allow gifts. Okay, that's what you can do. Okay, so we're going to have the starting call in about a minute. It should be starting. Biggest things I'm looking for: explanation of potential of the bot, explanation of gross margins and volume deliveries for 2024, explanation of the energy business and if they're kind of trying to ramp on that or if that's just, doing what it is and they'll see where it scales. And then AI and robotics in the context of not just the bot, but also FSD. How close is that coming? And then the general mood of Elon, if he's annoyed or if he's kind of optimistic for 2024 and really how he's feeling. So still not live yet, but it should be live in about 20, 30 seconds. That's what I'm mainly looking for. And we'll see where it goes from there. Derek says, no worries. I love everyone here. Derek, thank you so much. Derek's been as a support of the channel since the very early days. Very, very early. So really, 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 really means a lot. Thank you for being there. And Estudia PhD, this was the guy who just dropped on the stream. Thank you, Estudia, as well for sharing your thoughts on the stream. Okay, so we still got about 30 seconds probably coming up. You have to stand on one leg now and ring a cowbell. I love it. Yeah, dude, this is going to be a very, very exciting earnings call because either we get Elon excited and he's happy, or he's annoyed. I think in the chat as well. I mean, this is a good question to ask right before we get it. What would be an earnings question that you would ask Elon? I said this yesterday that I would ask him to be on my podcast. If I actually was on the earnings call, I probably wouldn't do that. I was probably too scared to do that. But I think I would ask him about when the hell FSD is coming, dude, and what does he realistically think it's coming? You'd probably get an answer that it's coming in 2 weeks, but I think that would be because FSD changes Elon said it's the company's either worth $1 trillion or zero if FSD works. So I would want to get a little bit more clarification on, where that happens and when that's happening. Amir Raz in the chat. LOL, your name is Amit. My name is Amir. I've been called Amir many, many times in my life. I've been called Amit. I've been called Amit. I've been called everything. So I never cared, dude. I always felt it was a little egotistical to care about how people say your name and to feel butthurt about it. So I never really cared. But yeah, it is Amit. It's a simple name, I would say. Also, the 25% AI questions going to come up. I want to see the reaction of their employees. Yeah, and I also want to hear the $25,000 car. That would actually be my main question over the FSD question. Is when is that car happening? Is it on the way? I mean, they mentioned in their earnings call that that's their next generation platform, or sorry, the earnings deck. But how serious are they with ramping for that? I think Mexico is the desired place. They want to ramp that up. India would be a great place, I think, to ramp that up as well, because in India, you need small, compact cars because there's just not enough space to have a car like a model. So we would have to see. Financial Journey in the chat says, sorry, man, I think I called you Amit before. Dude, please don't be sorry. You can call me whatever you want. I truly get Amit means limitless. Yes, it means infinite. Edmund says that's the only information that matters is the confirmation of the $25,000 car next year. I agree. That is, to me, the biggest thing. All right, it should be starting pretty soon. Let me just refresh this one. Yeah, we're still. Okay. Thoughts on PayPal? I'll stream their Investor Day tomorrow, 12:30 p.m. I think PayPal's undervalued. I think they're gonna announce some interesting things tomorrow. They said they have 6 innovations they're gonna announce. If any of those innovations are, reasonably important, it'll be fun. All right, here we go. It's starting. Tesla earnings call.
Good afternoon, everyone, and welcome to Tesla's fourth quarter 2023 Q&A webcast. My name is Martin Viecha, VP of Investor Relations, and I'm joined today by Elon Musk, Dave Aftanecha, and a number of other executives. Our Q4 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you. So the Tesla team did an incredible job in 2023. We achieved record production and deliveries of over 1.8 million vehicles, in line with our official guidance. And in Q4, we were producing vehicles at an annualized run rate of almost 2 million cars a year. This was really a phenomenal achievement. Looking at just the Fremont factory alone, we made 560,000 cars. This is a record. In fact, it's the highest output automotive plant in North America. And people are often surprised that the highest output car factory in North America is in the San Francisco Bay Area. It's a little counterintuitive, perhaps. And it's really had an incredibly positive impact on that entire area. What would have been a rundown strip mall is the highest productivity car plant in the Americas. Think about that. It was derelict when we got it, and now it's the most productive plant in this entire part of the world. And it's enriched the community in so many different ways. It's really a gem. So I'm super proud of the people that work there. Model Y became the best-selling vehicle globally, as predicted. The best-selling vehicle of any kind, not just electric vehicles, with over 1.2 million units delivered. The energy storage business delivered nearly 15 gigawatt hours of batteries in 2023 compared to 6.5 gigawatt hours the year before. So tremendous year-over-year growth, triple digits. Yeah, I think we'll continue to see very strong growth in storage. As predicted, I said for many years that the storage business would grow much faster than the car business, and it is doing that. Free cash flow remains strong at $4.4 billion in 2023, in spite of record spending on future projects. So we had record CapEx expenses as well as record R&D. This brings us to 2024. There's a lot to look forward to in 2024. Tesla is currently between two major growth waves. We're focused on making sure that our next growth wave, driven by next-gen vehicle, energy storage, full self-driving, and other projects, is executed as well as possible. For full self-driving, we've released version 12, which is a complete architectural rewrite compared to prior versions. This is end-to-end artificial intelligence. So another bit nets, basically photons in and controls out. And it really is quite a profound difference. This is currently just with employees and a few customers, but we will be rolling out to all customers in the US who request full self-driving in the weeks to come. That's over 400,000 vehicles in North America. So this is the first time AI is being used not just for object perception, but for path planning and vehicle controls. We replaced 330,000 lines of C++ code with neural nets. It's really quite remarkable. Sort of as a side note, I think Tesla is probably the most efficient company in the world for AI inference. Out of necessity, we've actually had to be extremely good at getting the most out of hardware, because hardware 3 at this point is several years old. So I think we're quite far ahead of any other company in the world in terms of AI inference efficiency, which is going to be a very important metric in the future in many arenas. So see, the new Model 3 is now available globally. So we did an updated Model 3. While the car looks similar, a lot of work has gone into the vehicle to make it better in every way. It is significantly quieter, more refined, better equipped, has longer range, and many other improvements. and I recommend taking it for a test drive. If you have not driven a Model 3 in a long time, you should really try the new one. So steady improvements. And we're very far along on our next generation low-cost vehicle. This is an earnings call, not a product announcement. So there'll no doubt be many questions that try to ask us about new products coming, but we reserve product announcements for product announcements, not earning calls. So, but we're very excited about this, and this is really going to be profound, not just in its design of the vehicle itself, but in the design of the manufacturing system. This is a revolutionary manufacturing system, significant, far more advanced than any other automotive manufacturing system in the world, like by a significant margin. Several years ago, I said perhaps the most important competitive characteristic of Tesla in the future will be manufacturing technology, and you will really see that come to bear with our next gen vehicle. The first manufacturing location for this will be at our Gigafactory and headquarters in Austin, Texas. And then we'll follow that up with other locations around the world. Probably the factory we'll build in Mexico will be second, and then we'll be looking to identify a third location, perhaps by the end of this year or early next, outside of North America. So, in conclusion, we had a great year with record production, record deliveries, and a strong free cash flow in spite of a very high interest rate environment. And we are focused on exciting new projects that will, I think, ultimately, if we execute on all these things, and it is very hard to do all these things, it's not a sure thing, but I do see a path where Tesla could one day be the most valuable company in the world. I do want to emphasize that is not an easy path, and a very difficult one, but it is now in the set of possible outcomes. And previously, I would not have thought it is in the set of possible outcomes. So, thank you again to all of our investors, our employees, and our suppliers for a strong year, and looking forward to a great 2024 and years to come. Thank you.
Thank you. And our CFO, Vaibhav, have some opening remarks as well.
Thanks, Martin. Good afternoon, everyone. As Elon mentioned, we had a record year in terms of both production and deliveries for our auto business, as well as record deployments in our energy business. This was achieved despite 2023 being a challenging year in terms of higher interest rates and higher inflation. Big thanks to our customer for being with us through this challenging period. I would also like to thank the whole Tesla team for their resolve and dedication throughout. In terms of 2023 financials, we ended the year with over $96 billion of revenue and generated $4.4 billion of free cash flow to end the year with over $29 billion of cash and investments on hand. Our 2023 GAAP net income was impacted by the recognition of one-time non-cash benefit of $5.9 billion from the release of valuation allowance on certain deferred tax assets. This was due to our recent history of sustained profitability and is similar to several other companies who have recently gone through a similar change in their accounting. Accordingly, starting with Q1, our book tax rate will now be more in line with other companies in the S&P 500. In our vehicle business, we continue to see improvements in our per unit cost despite us being in the early phase of Cybertruck ramp. As a result, our auto gross margin improved sequentially. That said, predicting auto gross margins is extremely challenging since there are many moving parts to this equation, some of which are out of our control, like the change in tariffs or local incentives, to name a few. While the teams are focused on cost reductions, we are approaching the limits within our current platforms. On the demand front, as promised, we made investments in digital campaigns in 2023. We fully appreciate the importance of customer education as we are still in a customer acquisition phase. Our data suggests that around 90% of our vehicle buyers in 2023 never owned a Tesla before. We are being creative in figuring out ways to bring in new customers and educate them about the benefits of owning a Tesla versus gas-powered vehicles. The key among them being total cost of ownership. This concept is mostly overlooked for just the upfront cost. We will be rigorous in evaluating our campaigns, curating the content, and optimizing spend accordingly to support the overall demand. There are two additional things I would like to mention as it relates to the US market. First, for customers who qualify for the IRA buyer credit, we now offer that as a point of sale benefit for Model Y, which means an immediate reduction of $7,500 at the time of purchase to the end customer. Secondly, we continue to offer very attractive lease rates for Model 3 and Y using our partner leasing program. Note that the sales under this program are recognized as upfront revenue and reported within automotive sales. Our energy storage business had another record year with deployments more than doubling and revenues increasing by more than 50%. This business is poised to again surpass our auto business in terms of growth rate in 2024. This has been in the works for quite some time, with us laying the foundation a few years back by building our mega factory in Lathrop. I would like to thank the whole Tesla Energy team for their efforts to make this a reality. Our services and others business also started contributing meaningfully to our results and our fleets as our fleet goes, as we expect the fleet-based revenues from supercharging, used cars, and services to continue to increase. For 2024, our focus is to continue growing our output, continuing our cost reduction efforts, and increasing investments in our future growth initiatives. Accordingly, we are currently expecting our capital expenditure for 2024 to be in excess of $10 billion. We believe this would be critical in helping us lay the foundation for the next phase of growth. Once again, I would like to thank everybody at Tesla, our investors, and our suppliers for being with us in this journey. We can open it up to questions, Martin.
Thank you. Let's go through investor questions. Question number one is from Michael. Given that you moved the start of the next generation compact vehicle production to Austin, has the timeline improved so that we might see the next generation platform vehicles in 2025?
I mean, I would certainly say things with they should be taken with a grain of salt. Since I'm often optimistic, with I don't want to blow your minds, but I'm often optimistic regarding time. But our current schedule says that we will start production towards the end of 2025, so sometime in the second half. That's just what our current schedule says. There's a lot of new technology, like a tremendous amount of new revolutionary manufacturing technology here. The reason I want to put this new revolutionary manufacturing line at Giga Texas was because we really need the engineers to be living on the line. This is not sort of a off the shelf, just works type of thing. And it's just a lot easier for Tesla engineering to live on the line if it's in Austin versus elsewhere. So, but we are currently expecting to start production second half next year. That will be a challenging production ramp. Like I can emphasize, we'll be sleeping on the line practically. In fact, not practically, we will be. But I am confident that once it is going, it will be head and shoulders above any other manufacturing technology that exists anywhere in the world. It's next level. So it's always difficult to predict what that S-curve of manufacturing looks like. So it always starts off real slow, and then it grows exponentially. And predicting that intermediate S-curve is difficult, but so I don't know. It's hard to say what the unit volume would be next year. We're not going to make any predictions on that front, but it does seem quite likely that we will start production next year.
Thank you. The next question is from Michael again. What has been the barrier to ramping 4680 cells into multi-million cells per week rate, and when do you expect to get there? Drew?
Yeah, first, I just want to allay any concerns regarding 4680 limiting the Cybertruck ramp, because I've seen some people commenting about that. To date, 4680 production is ahead of the ramp with actually weeks of finished cell inventory. And the goal is to keep it that way, not only for Cyber, but for our future vehicle programs. And as Elon said, it is an S-curve here too. Like it's hard to predict these things, but I'm just describing our goals.
It's a hard problem. Like,
yeah,
there are entire companies where all they do is make battery cells. That's like all they do.
Indeed,
Okay.
indeed.
We do a lot of other things,
Um,
and we got a lot of breakthrough technologies that take time to figure out with 46. It's not just that it's a 46 millimeter diameter by 80 millimeter tall cell. That's just the diameter. That's just the dimensions. There's a tremendous amount of new technology in the cell itself
and manufacturing technology.
Yes, exactly.
And just regarding what the team was able to do in Q4, Texas successfully swapped line 1 from the Model Y design of the cell to the Cybertruck design of the cell, which was that 10% cell energy increase I've mentioned before. And as with any major new product introduction, the factory and engineering teams collaborated to ensure quality of the new design and the process changes as their first priority. And now our focus returns to cost and production ramp in Q1. In terms of what we're doing, we're currently running 1 production line, 1 assembly line, using 2 assembly lines in addition for yield and rate improvement trials. And we have a 4th in commissioning, and 4 more will be installed starting in Q3 this year. So definitely this is a big year for ramping 4680.
But we also do want to emphasize that we also expect to ramp orders from our suppliers.
Yep.
So this is not about replacing our suppliers, it's about supplementing our suppliers.
Yes.
So we are very appreciative of our suppliers. Panasonic obviously is our longest supplier. They're an amazing company. We've got CATL, we've got LG, and BYD. Yeah.
Thank you. The next question is from Adam. Should retail shareholders be concerned that Elon has stated that he's uncomfortable expanding AI and robotics at Tesla if he doesn't have 25% of voting?
Yeah, I guess let me explain what my concern is here, which is that I see a path to creating an artificial intelligence and robotics juggernaut of truly immense capability and power. And my concern would be, I don't want to control it, but if I have so little influence over the company at that stage that I could sort of be voted out by some sort of random shareholder advisory firm. We've had a lot of challenges with institutional shareholder services, ISS, I call them ISIS, and Glass Lewis, which there's a lot of activists that basically infiltrate those organizations and have, strange ideas about what should be done. So, so I want to have enough to be influential. Like if we could do a dual class stock, that would be ideal. I'm not looking for additional economics. I just want to be an effective steward of very powerful technology. The reason I just sort of roughly picked approximately 25% was that's not so much that I can control the company, even if I go bonkers. And if I'm like mad, then they can throw me out. But it's enough that I have a strong influence. That's what I'm aiming for, is a strong influence, but not control. There's some way to achieve that. That would be great.
Thank you. The next question is, what is your expectation for automotive gross margin ex regulatory credits for the full year?
Like I said in my opening remarks, we're focused on reducing the cost of our vehicles. This is very extensive and involved exercise whereby we look at not just the component cost but down to the packaging used to get the materials to the production floor. Each element of the cost is scrutinized to optimize further. A few pennies saved at the subcomponent level, whether through engineering redesign or from many other things which I mentioned, leads to cost reduction. This is a constant exercise, and we just have to chase down every penny possible. We have a strong team which is hyper-focused on this. However, this is a very difficult thing to predict precisely because there are a lot.
We don't know. We don't have a crystal ball, so it's difficult for us to predict this with precision. If the interest rates come down quickly, I think margins will be good, and if they don't come down quickly, they won't be that good. Yeah. It's always important to remember that the vast majority of people buying a car is about the monthly payment. It's not that people don't want. We have tons of we have lots of people who want to buy a car but simply cannot afford it. And that as interest rates drop and that monthly payment drops, then they're able to afford it and they buy the car. It's pretty straightforward, and there are no tricks around to get around this.
Okay, thank you. The next question is, does the company anticipate 50% volume CAGR to be realized in either 2024 or 2025? If not, why not?
As we have said in our prior guidance, there will be periods where we won't be growing at the same rate as before. We are between two major growth waves. The first one began with the global expansion of Model 3 and Y. And we believe the next one will be initiated with the next generation platform. In 2024, our volume growth will be lower, as we have said, because we're trying to focus the team on the launch of the next generation vehicle.
All right. Thank you very much. The next question is from Michael. When will Tesla start construction on the Giga Nevada expansion and Giga Mexico? And when can we expect each of these to produce their first products, such as 4680 cells, Semi, and the next-gen vehicles?
We have recently broken ground for the next phase of Giga Nevada expansion to incorporate Semi and other projects. But as said earlier, as regarding Mexico, we want to first demonstrate success with the next generation platform in Austin before we start construction. Therefore, we have started the long lead work to get the basics ready and plan to follow our recipe from the 3Y ramp with Shanghai, where we started with learnings from Fremont and ramped really quickly.
Yeah, exactly. It's important to emphasize that, Model 3 production was 3 years of hell, honestly, before. Some of the worst years of my life, frankly. I still have mental scar tissue from those 3 years, as do many. But then Model Y was, somewhat of a variant on Model 3, so a much easier situation. And then we were able to actually do slightly improved versions of, in some cases, significantly improved versions of the Model Y production line in Shanghai and Berlin. And that's the right. I think the sensible way to go about things is figure out the core technology of the manufacturing line and then replicate it with improvements throughout the world. So.
Thank you. The next question from Michael is, has there been any progress made with an FSD licensing agreement with another company?
I really think lots of car companies should be asking for FSD licenses, but and we've had some tentative conversations, but I think they don't believe it's real quite yet. I think that will become obvious probably this year. And I do want to emphasize that if I were CEO of another car company, I would definitely be calling Tesla and asking to license Tesla full self-driving technology. It's definitely the smart move.
Thank you. The next question from Siddharth. What is the timeline for Optimus' first production of a volume production line, and what are the barriers to getting there?
Optimus obviously is a very new product, an extremely revolutionary product, and something that I think has the potential to far exceed the value of everything else that Tesla combined. And when you think of an economy is productivity per capita times capita. But what if there's no limit to capita? There's no limit to the economy. And the technologies the AI technologies we developed for the car translate quite well to a humanoid robot, because the car is just a robot on 4 wheels. Tesla is arguably already the biggest robot maker in the world. It's just a 4-wheeled robot. So Optimus is a humanoid robot with arms and legs. It's by far the most sophisticated humanoid robot that's being developed anywhere in the world. I think we've got a good chance of shipping some number of Optimus units next year. But like I said, this is a brand new product. A lot of uncertainty is when there's a lot of uncertainty and you're in uncharted territory, it's obviously impossible to make a precise prediction. But we will be updating the public with progress on Optimus, every few months, and you can see that it's advancing very quickly. I was just in the Optimus lab actually until late last night. I think until like midnight or something. I finally left the Optimus lab. The team's doing amazing work. That's obviously a case where we want to make sure that Optimus is safe, especially at scale, and that it should be impossible for any centralized control to upload malware to a humanoid robot. So we're going to want to build in localized shuttle that cannot be updated from from a central server. That's the case where we really have to give extreme thought to safety. But like I said, I do think it has the potential to be the most valuable product of any kind ever, by far.
Just to comment on the barrier, I think the barrier, and we've talked about this, is like getting it to actually do something useful. Like we can get it to walk around, we can get it to do things, but it's like that utility part.
We can already do some useful things.
But to making millions of these things, it's like utility. Got to get the utility up.
Yeah. A smart robot that can that's capable of doing generalized tasks is what it will be. And in terms of doing, moderately specialized tasks, well, it can already do that. And it'll just get better through the course of the year. As we improve the technology in the car, we improve the technology in Optimus at the same time. It runs the same AI inference computer that's on the car. Same training technology. We're really building the future. The Optimus lab looks like the set of Westworld. But admittedly, that was not a super utopian situation.
Yeah, not the best reference.
Yeah, the creators of Westworld, Jonah Nolan, Lisa Joy Nolan, old friends of mine actually, and I invited them to come see the lab. I think they'll come see it hopefully soon. It's pretty wild, especially the sort of subsystem test stands where you've just got like one leg on a test stand, just doing repetitive exercises, and one arm on a test stand. Pretty wild. Yeah.
We're not entering Westworld.
I'm sorry, guys. This is really tough. I'm going to pause it real quick. This is a tough earnings, dude. They're not even sounding excited about the bot. I don't know if you guys feel the same in the chat, but this is like one of his guys just said there's no utility in the bot. And Elon was like, well, there's some utility. This is not that inspiring. Stock right now, real quick, is at 198 after hours.
Right. Well, going to take safety very, very seriously.
Thank you. The next question from Nermin is, how many Cybertruck orders are in the queue, and when do you anticipate to be able to fulfill existing orders?
First of all, I want to thank all the Cybertruck reservation holders for their patience. The reservation to order conversion rate so far has been very, very encouraging. If the trend continues, as it's very likely to be, we will soon sort out all the builds in 2024. And also, we have new orders coming after the launch. The order numbers keep growing. So we're now all hands on deck, focused on ramping, so we can fulfill all the demands in a reduced wait time.
Yeah, it's important to emphasize that this is very much a production constrained situation, not a demand constrained situation. And we, obviously we could dramatically raise the price, but that doesn't feel right to us to sort of gouge people for for early delivery. But really the demand is off the hook. As long as the price is affordable, I mean, I see us ultimately delivering on the order of something like 250,000 Cybertrucks a year in North America, but maybe more, but give or take, roughly on that time frame. And it's I mean, it sure is a head turner.
Definitely is.
Yeah.
Anywhere you go, people look at you.
Yeah.
They give you thumbs up.
Yeah, it's like finally the future looks like the future. Yep. For the other trucks on the road there, and there's some very good trucks on the road, but if you were to switch out the brand name, you wouldn't hardly know which company made them, but you definitely would know the Cybertruck. That's our best product ever.
All right, thank you. The next question is, can we get Tesla energy volumes reported in the production and delivery release?
Yeah, we will strive to do so starting from this quarter. And just a brief update from the business perspective. Megapack continues to see strong demand signals globally, driving consistent growth trajectory through 24 and 25. We want to thank all of our partners who've put their trust in the Megapack team to execute on critical infrastructure around the world. And I would like to personally thank the Megapack engineering and production teams for their strong 2023 execution. Lathrop continues to ramp through 2024 with the operation of a second final assembly line to double capacity from 20 to 40 gigawatt hours by the end of the year.
Thank you. And the last investor question is from Siddharth. What are the preliminary results on return on investment of your ads and education campaign? Given that many people still lack awareness that Tesla average price is less than the average non-luxury car price of $45,000, will you expand educational ads?
As Elon mentioned, the ultimate solution to increase EV adoption is really address the affordability issue. But at the same time, we do aware there's an awareness issue as well. So in Q4, we ran a series of digital campaigns, very targeted digital campaigns across different geos and different channels. The target of these tests is really just to drive awareness and ultimately measure the return of investment on those digital channels. And the messaging we're driving is really focused on our product and also try to address some of the misconception of the EV, such as safety, affordability. In one particular awareness campaign we run in Texas, we reached the audience about 10 million unique viewers and generated close to 500,000 visits to our website. A large number of these viewers are first-time visitors to our site. The traffic through these digital channels actually behaved very similar to those organic traffic come to our website. So going forward, we're just going to keep exploring different channels and doing our trials to get a better understanding of this effectiveness of this digital campaigns.
Yeah, but I would also like to caution that we'll be very careful that we don't want to overspend on this side. We want to make sure people are aware, but that's where we'll keep tweaking our methodology about how and where we spend the money, because we understand the importance of increasing awareness, but at the same token, we don't want to spend a lot of money on just creating awareness.
Yeah, I mean, there are some geographies where our market share is remarkably low, like Japan, for example. Now, we also need to make sure that we have superchargers in the right locations, and the service centers are there, and the product works well in Japan. But Japan is the third largest car market in the world of any country. So, and we should at least have a market share proportionate to, say, other non-Japanese car makers like Mercedes or BMW, which we do not currently have. So I think that's the case. And when I talk to friends of mine in Japan, they're like, there is like quite a lack of awareness of Tesla. So that's the case where we definitely need to increase awareness in countries and regions where there is not that much awareness.
Thank you. Let's go to analyst questions. New Street Research. Pierre, go ahead, please. Feel free to unmute. Pierre, can you hear us?
Okay. Well, it's really tough to find the unmute button on Teams, guys. I'm sorry for being late. So yes, my question would be, on like the cost reduction. You've talked about it already a lot, and if I look at it over the last like 5-6 quarters on average, the COGS per car has been coming down like more than 2% sequentially on average. So that means you're like on a trajectory of COGS per car going down 10% a year. So that's probably like unheard of in the auto industry. I don't think any car manufacturer ever achieved that. But that's very, very mundane and it's a good performance, but it's a very normal performance in a lot of other manufacturing industry like microelectronics or consumer electronics. And so I'd love to hear your thoughts about whether you consider yourself closer to the latter, to like a microelectronics business where you have this ability to actually always improve costs, you have more control on how things are put together into your fabs, and you see yourself sustainably taking costs down with that kind of pace, or do you think your ability to take down cost is actually going to become more like in line with the rest in the industry over time?
Yeah, I think I've covered this in a pretty lengthy detail, even in my opening remarks and in a previous question. But to just further clarify, we are constantly looking for what we can do to reduce costs. And like I said, it's a game of pennies. We've talked about it before as well. And the team is constantly going and checking where can we reduce the cost further. And do I believe that we will have the same pace which you've seen over the past few years? Probably not, because remember, we were coming out with a period wherein commodity prices were rising. So then we did see benefits coming from that. So those are more or less, taken care of. But there is more which we're still chasing. And, I would say a big kudos goes to the team out here at Tesla, both the engineering team as well as the supply chain team, because every time we give them a challenge, they go gangbusters to try and figure out whatever they can to take out further cost. But yes, I would want to caution that do not project the previous cost reduction at the same pace completely in the future, because with our current platform, we are getting to a place wherein, there are limitations.
Yeah, the increased scale also sort of helps us there. As we introduce new products, we have the opportunity to go renegotiate existing suppliers for better pricing. We're looking at every penny, like Vaibhav and Elon mentioned. Just to give you an example, our inbound logistics cost has come down by 22% year over year. And this is because of optimization on using returnable packaging as opposed to cardboard, which is even better for the environment. Optimizing trucking routes, negotiating better pricing with shipping companies, with trucking companies, going with full truckloads, and just doing that sort of. The bigger we become, the more we put thought into these things, and the more efficient we become as a result of it. So those work streams are going to continue.
And we're also getting into the tiers of supply chain to see if there are opportunities.
Yeah,
getting into the tier 2s, tier 3, tier 4 levels, and then negotiate those pricing as well to get more efficiency out of the system.
And then on the design side, we're not static, right? Like especially in areas where the technology is still improving rapidly. Power electronics is a great example. We continue to bring improvements there that are like fundamentals, sort of driven from the device up, that result in cost reductions generation over generation, and they don't only go into the new vehicles; they come to the old vehicles as well. So that's closer to what you were talking about with like the microelectronics space. Some of that exists in the vehicle.
Yeah, certainly our car is more
computer than car in many ways, and has a lot of new tech over the last 100 years of automotive production that everyone trying to scrape pennies from.
We have a crazy amount of compute in our cars compared to anyone else.
Yeah.
It's like orders of magnitude.
And we get to ride that down, right?
Like 1,000 times more. I don't know, some nutty number.
I mean, like if I just look at the main microcontroller that makes the motor go, for example, like when I think about what it cost when we stuck it in a Roadster in 2006, and what it costs now, it's like there's no comparison.
Yeah.
So we've definitely been riding that electronics cost wave.
Yeah.
And then even on the what you call traditional vehicle side, we do things that no other automakers do to bring costs down through breaking down, the way structures are built and the way we put our cars together. And I think that mindset that we have is very much closer to the micro processor or power electronics industry than the automotive industry.
Thank you. Pierre, do you have a follow-up?
Great. Yes, a quick one. It's you mentioned this like phase in which you are between two big growth periods. I'd love to hear you about what you consider the size of your addressable market with the portfolio you have today, like the 3, the Y, the X, and the S. What's your estimate of your addressable market? You're shipping like probably about like a 2 million unit run rate today. And given the price points of these cars, what kind of market share of what you address with these cars do you think you've already achieved today?
I don't know if anybody. I actually don't think we have a firm
Yeah, I'm like,
idea of this. It's hard to say exactly.
yeah, I won't say the one way to think about it is look at the automotive industry as well. EVs still contribute a very small market share. So yes, our goal is to try and take as much market share out of that pie. But do I have a specific number to give you? I don't think we can say that with certainty.
And it's a growing pie as well.
Exactly.
It's 9% today, but it could be 20% in a couple of years or in the future.
Yeah.
And certainly, like the way we've looked at it, and we've always said this, it's not about how many EVs you sell, it's how many great cars you can sell, how many vehicles you can sell. And that market's, 100 million a year. And, we're barely 2% of that. I still think there's 98% more to get.
Yeah, I mean, it's worth noting that if you look at, say, the average selling price of the other top selling vehicles in the world, they are much lower priced than a Model Y.
Yeah.
So like a Toyota RAV4 or Corolla, Honda Civic, that kind of thing, they're much lower priced than ours. So people are really stretching their wallets to be able to afford a Tesla. It's quite a difficult thing for them to do, and remarkable that it's the best-selling car in unit volume, despite being much more expensive than other high-volume cars.
Thank you. Let's go to the next analyst. The next question comes from Adam Jonas from Morgan Stanley.
Hey, everybody. So I can't wait to see the Optimus Lab. I'm sure everybody on this call feels the same way. Your last AI day, Elon, was September 2022. Can we expect a Tesla AI day this year? It seems like a lot's changed in that realm. And is this year the time?
Yeah, it's a good question. We have found that when we do these AI days, some of our competitors literally look at what we do on a frame-by-frame basis.
They do.
And then we find these things being copied.
Same thing with Battery Day.
Same thing with Battery Day. So we have to be a little cautious about, revealing the exact recipe of the secret sauce. But I think some kind of update would be good to do. I'll talk it over with the team, and I think we might do something later this year. Our main goal with these AI Day things is recruiting. So
yes,
and to sort of change the perception of Tesla as people thinking of Tesla as a car company when they should be thinking of Tesla as an AI robotics company.
Mm-hmm. Maybe as a follow-up, Elon, I'd love your thoughts on the topic of China-based OEMs expanding into Western markets as the China market kind of gets saturated and there's a tremendous growth in the supply. How much success should Tesla investors allow for this competition to achieve in Western markets? And can you envision a scenario where Tesla could partner with a Chinese OEM to help accelerate sustainable transport in markets like Europe and the United States? Thanks.
Well, our observation is generally that the Chinese car companies are the most competitive car companies in the world. So I think they will have significant success outside of China, depending on what kind of tariffs or trade barriers are established. Frankly, I think if there are not trade barriers established, they will pretty much demolish most other car companies in the world. So they're extremely good. We don't see an obvious opportunity to partner. Certainly we're happy to, except on the supercharger front, we're obviously happy to give any electric car company access to our supercharger network. We're also happy to license full self-driving, perhaps license other technologies, and anything that could be helpful in advancing the sustainable energy revolution.
Thank you. And the next question comes from Dan Levi from Barclays.
Hi, good evening. Thank you for taking the questions. First, I'm wondering if you can just walk through some of the gating factors required to unlock your next-gen platform. You talked about a number of cost initiatives back at the Investor Day a year ago, things in manufacturing and powertrain. Maybe you can just give us a sense of where these initiatives stand. And do you believe it? We know that there's a number of new features and technologies in Cybertruck, things like 48-volt architecture, really employing your 4680 batteries. To what extent do you think Cybertruck is really a proving ground for the next-gen platform and is really going to be a gating factor to unlocking the cost reductions needed for the next-gen platform?
Yeah, I don't think that anything on Cybertruck should be considered gating for the next gen platform. We're obviously doing a lot of manufacturing innovation, as Elon said, for a next generation vehicle. When you do something at that scale, you have to prove it out. You don't just throw it on the line and just build it. So we're going through those validation phases for all of those new manufacturing technologies now. Sure, 48 volt was definitely something we wanted to carry forward, and it's something we hope the industry adopts as well. We're also open to partnering on that if everyone wants to do that.
Finally, man, the people that really know that this is like the inside baseball thing, but 48, it's so high time that the auto industry moved from the random number of 12 to 48.
Random number of 48.
Yeah, well, it's much less random.
Slightly less random based on human injury, but
dramatically reduces the amount of copper you need in the vehicle, and and also moving to a sort of higher bandwidth communications, sort of Ethernet level communications as opposed to CAN bus, which is pretty
slow.
So it's really just bringing cars to
the 21st century.
Yeah, pretty much.
So like certainly like
it's not exactly, it's like normal for a laptop.
Yeah. Certainly bringing that is an evolution in our architectures of vehicles, but it's not gating by any means. The gating work is just to finish the design and manufacturing of the car, test them out, and get them going.
Yeah, I mean, programs in execution mode, right?
Yep.
Right. So it's talking about like tooling lead time, manufacturing
Factory lead
equipment
time,
factory lead time, and executing those programs.
There's a lot of specialized machines that make the machine for a next gen vehicle. So these are not machines you can just order from anyone. They actually, you have to design a machine that has never existed to build a car in a way that has never existed.
So you don't just have like a design validation phase, but you have an equipment design validation phase as well.
It does make it very hard to copy us because you have to copy the machine that makes the machine that makes the machine. So,
talk about tiers.
It's not, it's like, exactly, manufacturing exception. So, I do think it's quite a powerful sustainable advantage because there just is no place to go to order the machines that make a next gen car that don't exist.
Great, thank you. As a follow-up, your release does not mention Dojo. So if you could just provide us an update on where Dojo stands and at what point you expect Dojo to be a resource in improving FSD, or do you think that you now have sufficient supply of NVIDIA GPUs needed for the training of the system?
I mean, the AI hardware question is that is a deep one. So we're obviously hedging our bets here with significant orders of NVIDIA GPUs, or GPUs are the wrong word. There really needs to be, there's no, it doesn't, you can't like produce graphics. So that's what, it's not a graphic processing unit, neural net processing unit or something like that. Yeah, GPU is a funny word, like vestigial. And a lot of our progress in self-driving is training limited. Something that's important with training, it's much like a human. The more effort you put into training, the less effort you need in inference. So just like a person, if you train in a subject, sort of classic 10,000 hours, the less mental effort it takes to do something. If you remember when you first started to drive, how much of your mental capacity it took to drive, you had to be focused completely on driving. Then after you've been driving for many years, it only takes a little bit of your mind to drive, and you can think about other things and still drive safely. So the more training you do, the more efficient it is at the inference level. So we do need a lot of training. And we're pursuing the dual path of NVIDIA and Dojo. But I would think of Dojo as a long shot. It's a long shot worth taking because the payoff is potentially very high, but it's not something that is a high probability. It's not like.
Dude, did he just say Dojo's a long shot and it's not a high probability? That woke me up. Holy crap. What that I've never heard Elon say that. Maybe I've just never heard him, but that just woke me up.
A sure thing at all. It's a high risk, high payoff program. But Dojo is working, and it is doing training jobs.
The way I thought of Dojo a while ago was once they scale up like their compute, they're just gonna say fuck NVIDIA, we're just gonna keep using Dojo. But now maybe I'm getting that wrong. But now he's like, it's a long shot in terms of it replacing. If anything, dude, that's more demand for NVIDIA. That's just like more bullish NVIDIA right now. If he's saying we're not gonna get it to not have to buy GPUs from NVIDIA. Wow, I did not expect that.
So, and we're scaling it up. And we have plans for Dojo 1.5, Dojo 2, Dojo 3, and whatnot. So, I think it's got potential, but I can't emphasize enough, high risk, high payoff. So I think it still makes sense given the, even if it's a low probability of success with a very high, I think anyway, I'm belaboring the subject. It's a very interesting program. It has the potential for something special. There's also our inference hardware in the car. So we're now on what's called hardware 4, but it's actually version 2 of the Tesla designed AI inference chip. And we're about to complete design of.
It's not just me, right? That's not just me. Everyone in the chat has heard him say Dojo is the future. We're not going to need NVIDIA chips. We're not going to be having to pay NVIDIA billions of dollars because we're going to make it ourselves in terms of the compute, not the chips itself. But that's what's going to create our upside, and that's going to increase the margins on the cars as well because we're going to vertically integrate so well. We're going to have all of our own compute. This is the first time I've heard him say it's a long shot, and he said it's an interesting idea. This is definitely not. Yeah, it seems like you in the chat also. This is surprising to other people as well.
Terminology is a bit confusing. We're about to complete design of hardware 5, which is actually version 3 of the Tesla design chip because the version 1 was mobilized with Tesla. So, and we're making gigantic improvements. But from hardware 3 to 4 to 5. I mean, there's a potentially interesting play.
Stock's at 197 right now.
Where when cars are not in use in the future, that the in-car computer can do generalized AI tasks, can run a sort of, GPT-4 or 3 or something like that. If you've got tens of millions of vehicles out there, even in a robotaxi scenario where they're in heavy use, maybe they're used 50 out of 168 hours. That still leaves, well over 100 hours of time available of compute hours. It's possible with the right architectural decisions that Tesla may in the future have more compute than everyone else combined.
Thank you. And the next question comes from Colin Langham from Wells Fargo.
Oh, great. Thanks for taking my questions. As we're thinking about going into 2024, the press release talks about hitting 36,000 or slightly above in Q4. I mean, and the comments in the release talk about approaching the natural limits, and it sounds like you're continuing to try to whittle that away, but that sort of implies there's not much left. In addition, you have the hourly wage increase, I guess, will add to that into next year. And I thought you said raw material costs are kind of, that benefit is sort of almost played out. So is there an opportunity to continue to go below the 36, or should we kind of be modeling that it kind of stays at this level into 24?
We are definitely aware of the cost increases which are coming through because of the wage increases. But like I said, we keep looking at other cost opportunities and try and figure out where else can we cut down. So there is definitely more opportunity to bring down costs further. I won't specifically guide to a number which we will try and get to, but there's definitely more opportunity there.
Yeah, we're chasing lots of cost opportunities on the design side still for 2024. North of 8 figures is what we're worth of, just in my organization, and Lars has got a bunch. And then from a commodities perspective, it's such a long cycle time through the whole material supply chain that even with what we've already seen to this point, there's more to come on commodities reductions.
There's still some tailwind left on the commodities.
That's what I mean. Yeah.
And aluminum and steel.
Yeah.
And battery materials.
It boggles my mind to think that if we make a 1% improvement in costs, that's $1 billion.
Yeah. Yeah.
So it's like, on average, if we reduce the cost by 1 penny, $1 billion. What? And we started off, wasn't that long ago, that we're only making like 10 cars a week. Yeah. So where does it lead ultimately? With good execution, like I said, it's not a slam dunk, but with if we execute very well, I think Tesla could be the most valuable company in the world.
Thank you. Colin, do you have a follow-up question?
Yeah, just a quick follow-up. In the commentary, you mentioned the taxes would go to the S&P 500 level. I think you've been trending slightly below 10%. S&P, I think, is typically 25%-ish. Is that going to, should we expect that to jump right up next year when we're modeling next year? Or would it be like a gradual change over the next few years? And any cash impact from that tax change as well that we should be considering?
Yeah, so there's no impact on cash taxes from the release of the valuation allowance, which I spoke about. What it does is it's how you account for taxes on your books. So it's basically an accounting change, wherein there are certain jurisdictions, because we had enough NOLs, etc., wherein we didn't have to accrue book taxes. Now that the valuation allowance has been released, and we have recognized deferred tax assets on the books, that means your tax rate immediately goes up.
Okay. I think that's all the time we have for today. Thank you so
God.
much for all of your questions, and we'll speak to you again in 3 months. Thank you. Bye-bye.
Thank you.
End the freaking call, bro. What was that? What the fudge was that? All right, I'm going to talk for about 10, 15 minutes about my thoughts. I have some notes here. That was not, I hope it wasn't just me. I mean, I know there's some of you that thought the call was okay. Definitely the call was better than previous calls in terms of just like erraticness. But dude, what the fuck did we just sit through? Like, that was just, I have a couple of things I want to talk about. That was not, it wasn't that it wasn't good of a call. It was just unexpected in terms of the excitement level I think we would get from someone like an Elon Musk after a, lackluster earnings. You want to get your investors excited, and there just wasn't a ton of excitement. Okay, so a bunch of things I want to talk about. All right, so let's start off with this. We'll leave the dojo thing for last. Let's start off with this. First of all, on the general high level overview thoughts on the call is that I thought this call was kind of like take it or leave it, right? That was kind of his core thesis. Take it or leave it. We are building a car company. We are building a car company that a lot of other people can't replicate. Energy, manufacturing, AI, all that stuff. There were less specifics on how they're going to execute all this stuff, and more on terms of the philosophical notion of if we create the best car, if we execute correctly, we're going to win. Elon said this, I think, at least 10 times. If we execute correctly, we have a chance of becoming the most valuable company in the world. That's fine. He said this a billion times, but no one wants to hear that when you have a crappy quarter when it comes to the numbers. So in the context of my high-level overview thoughts, Elon was lackluster. He was not excited. He definitely wasn't erratic. He didn't say anything crazy, but he wasn't excited to the point where investors would be like, yeah, you had a crappy quarter when it comes to margins. You missed on revenue, missed on EPS, missed on overall growth in terms of the numbers that analysts expected versus what Wall Street expected, revenue, etc. You're not that excited on the earnings call, so why should I be that excited to buy the dip? That's what I didn't get from Elon. And I think if we got that from Elon, it would have been a little bit more excited to see what he was going to say. Margins were up. I'm sorry. Margins were up, but analysts expected 18.2, and I think they came in at 17.6. And really, when it comes to the stock, that's all that matters, right? What the margins, what the psychological perception is from analysts on Wall Street versus the actual numbers. Yes, it was up, but in the context of what Wall Street expected, revenue, EPS, and margins were a miss from Wall Street. So overall, Elon has to take that into account, that if they miss on a lot of those metrics, he has to present a narrative, and the narrative really just fell flat on this earnings call. Okay, so that was the first thing on just high-level overview thoughts. In terms of the bot, let's talk about that. The bot was very weird, guys. The bot was very weird. At one point, I don't know who he's sitting with. I think it was, I don't know the guy's name, but it wasn't the Indian guy who I think is the new CFO. It was the other dude who was like, they were asked about the bot and the potential of the bot. They said two things. They said, we're going to give an update in terms of showing what the laboratory looks like. They said it looks like Westworld. By the way, that show fell off a cliff after season 3, but season 1, season 2 was pretty good. And so Westworld is kind of a dystopian reality. So it was an interesting comparison they used, but they said they're making a lot of progress on it, and they said it's doing well, and they're going to give an update. But then one of his co-guys was like, one of the execs was like, yeah, it's not really useful yet. So until it becomes useful, it can't really get to market. And that's just, he's right. He's probably right. I mean, folding clothes is not necessarily the biggest use case of, replacing automotive workers, replacing 50% of, global workforces, which is 50% of GDP. That's a $50 trillion TAM. So that's not exactly what you want to say there, even if you're correct. But then Elon pushes back and he's like, well, wait a second. No, there are some useful things. And they both start chuckling. And the guy's like, yeah, well, it's not that useful. And then Elon chuckles back. And that whole exchange was like, what? Dude, like you guys are supposed to be presenting a narrative that's way more exciting than this. Right now, stock's at 196 after hours, so selling off about 5.4%. I think when it opens up in the morning, this is not going to be a fun open. This is not going to be a fun open. Look, Adam Jonas, who has the highest price target on Wall Street for Tesla. I mean, we'll talk about Dojo in a second, but he basically got his entire thesis for, I think, what, 385 or 400 on the stock, which is Dojo. That's a big component of his thesis that just went to shit at the end. I mean, this is the type of stuff we heard from this earnings call in regards to what was going on. So the bot was not executed in terms of the conversation, I think, in a meaningful way. They didn't really sell the vision or sell the dream. They talked about the fact that it could be successful, but they definitely didn't talk about the fact that it's ramping up in a way that investors should get excited about it. So if you want to buy it because of the bots, it doesn't seem like it's coming out for the next 5 years, quite frankly. Maybe it's going to come out in the next 2 years, maybe. But in terms of mass scale production, where they really have this thing selling like hotcakes across, forget, individual consumers, just factories across the world, which I think would be the biggest use case. That's not happening anytime soon. That's not happening anytime soon. So on the bot question, wasn't really inspiring. Again, it wasn't bad. It just wasn't inspiring. And you would expect for a little bit more of an inspiring of an earnings call. I mean, it seems like these guys didn't have any energy. Seems like these guys needed to like drink a Celsius or something, but they just weren't super optimistic and, excited to talk about the vision for the most important company in the world. $25,000 car. This thing was basically said as it's not going to happen anytime soon. Elon said mid-2025, maybe the next generation platform will be ready to come to scale. So that Reuters report we got last night about 2 a.m. that said the $25,000 car will be discussed. I mean, even Elon at the beginning of the call, he was like, don't ask me about new products. Earnings calls are not for me to talk about new products. We'll talk about those on investor days. And then obviously he got some questions on the $25,000 car. And he just said, look, the next generation vehicle, he didn't say it was going to be 25,000, just said the next generation vehicle was not going to happen anytime soon. He said mid-2024, mid-2025. That is also tough for investors to handle because it's not easy to deal with the fact that that's not happening anytime soon. One of the other quotes he said about this it's just the harsh reality is he said, in order for the next generation vehicle to happen, we're going to have employees having to sleep on the line. Basically saying, I mean, it's going to be ruthless execution. There's probably going to be a lot of, F-ups that happen, but there's going to have to be just an incredible amount of dedication, focus, and execution to get that next generation vehicle at scale. And that's 18 months from now. If even then it happens in 18 months. He said late 2025. Sorry, not mid 2025, late 2025. So the bot wasn't inspiring and the next generation vehicle wasn't inspiring. And again, when I say this, I'm not trying to say this from a perspective of, oh, they need to promise it's going to come tomorrow. I'm just stating the truth. Like, these are very hard things to execute on. And Elon's saying that he's being very honest, but he's being so brutally honest that it's like, when you break up with someone, you want to break up with them calmly, and just be like, I still love you. He's just like, no, we're like, he's being he's like, either take it or leave it. He's like, he doesn't care is my point. He does not care about how you feel. He's kind of just making the argument that it is what it is. And either you believe it or you don't believe it, but it is what it is. Think Elon was high? No, I don't think Elon was high. And thank goodness none of the analysts asked if he was taking drugs, because that would have been an interesting question. But I don't think he was high. I think he was just uninspired, because I think the guy's tired. He's running $6 billion, multi-billion-dollar companies. I think he's tired. We got to give him a little bit of grace here, but he's definitely not in the best headspace in regards to inspiring people on the call. Now, granted, he was not erratic. The last earnings call, he was kind of pissed off, kind of cursing people out. He was not like that, but he definitely wasn't super exciting on this earnings call. He did make a joke. He said on the 25% of voting shares. So he clarified his statements just like what he said on Twitter. It wasn't that big of a deal. He basically said, look, I need some control. If AI is going to be super powerful, I want some control in my own company. I don't need more economic control. So he doesn't need a whole suite of billions of dollars of compensation. He just wants more control. He also said, we've had some issues with institutional shareholder services, ISS, or as I call them, ISIS. Haha. And I kid you not, the stock went, I took the screenshot right when this happens, from 199 to 197. It happened like immediately. That happened. Okay. 199 to 197. So, that was fun. That was at least was some excitement for the call. But even like the joking elements of Elon that didn't really show up outside of that one joke. Right now we're 196.15 on the stock outside of that one joke, which wasn't, I thought it was a funny joke, but I don't know if investors across the world, I mean, look, millions of investors were listening to this at the same time. I don't know if they thought that was the funniest joke in the world. Definitely the investors in different parts of the world. I don't know how they felt about it. So that was one of the things he said about the joke. And then let's go on to the last point, which is Dojo. Also, a quick thing before Dojo, they did not give any numbers for margins or a number of deliveries into 2024. I think they were asked about that and they kind of just avoided it. And they said, look, we'll do, it's really hard. We're executing, we're trying, and we're going to keep innovating as much as we can. And, that's it. They did not say it would. They did say in the earnings deck it would be significantly lower than what it was this year, notably lower. So far, that notably, lower number has not been revealed yet. Now, in the context of Dojo, okay. this was really weird. Dojo, from the way I understand it, is a vertically integrated component of Tesla's manufacturing, AI, and robotics business, along with FSD, that allows them to run compute without having to pay billions of dollars to NVIDIA. Now, they're still going to pay a ton of money to NVIDIA to get the chips, and they're paying as much money as they can, as quick as NVIDIA can get it to them. But Dojo is their way of not needing to do that. That's like a bird's eye overview of why Dojo is very bullish for investors. It increases margins, it decreases capex, and overall makes the process of FSD becoming faster. Elon Musk says, and I quote, "Dojo is a long shot and has a low probability of success. Ha ha ha." He kind of like chuckled when he said that. And it's an interesting idea, but it likely isn't going to, happen. Yeah, right? It likely isn't going to be something that's super, it likely isn't going to be something that's gonna take place. And again, when he says it's likely something that's not going to take place, I think he's not saying he's factoring it out as like, there's no way it's happening. It's more so a question of just like, well, it's unlikely, right? It's unlikely. And so if it's unlikely, it begs the question in the context of Dojo, if it's unlikely, like, should there be an investment thesis based on Dojo? Again, this is taking the CEO's words around what's happening. It's unlikely. I mean, I don't know, dude. I mean, if the CEO is telling you it's a long shot and it's unlikely, I don't know. I don't know what to say. Like, it's just, and as soon as I said that, everybody in the chat pretty much agreed with me. So it wasn't just me. I haven't listened to every single earnings call, but it wasn't just me. I think I did know enough about Tesla to assume Dojo was a bull case. I did an interview with Warren Redlick a couple months ago, and he spent a whole 20 minutes educating me about Dojo and saying why that's going to completely retransform, the way you think about margins and all this stuff. And you got the CEO just saying Dojo's a long shot, has a low probability of success, and it's likely not happening. So like, I don't know what to say. I don't know what to say. A long shot like robotaxis, I don't know. I feel like robotaxis is more likely than Dojo. So I have no clue. 4.680s are unlikely as well. Yeah, like maybe he's sandbagging it. Maybe he truly is sandbagging it. Maybe. I think they're well on their way. I mean, that's the bull case, is that they're sandbagging it. Adam Jonas, whose entire thesis is based off Dojo, he gets super mad. He downgrades the stock. The biggest bull downgrades the stock. Then boom, the stock falls to 140, 150. Elon buys a shit ton of shares, and like Kathy buys, and like this whole 2023 story plays out again. That could happen. It's just, I don't know why he would be so fragile with the stock at this stage by forcing that to happen. And the way he was talking about Dojo kind of sounded like he wanted that to happen. Tesla's at 195. Yeah, 195.35 right now in Tesla. 195.35. Stock is selling off about 6% after hours right now. 195.30. Tough, man. Tough world. Tough world for Tesla. I mean, I think those were the core things. So it's tough. It's really tough to think of that. Let me put a poll. Let me put a poll in the chat right now about what you guys think about the earnings call. And I guess let's end it off right there. Poll: is Tesla green tomorrow? Green meaning it's above 195. Let's frame it as that. Green is above 195. And in general, let's spend about 5 more minutes. What were your thoughts on the earnings call? Dojo wasn't super bullish. $25,000 car, definitely not happening till late 2025, if that. Bot is very exciting. Maybe they downplayed it so that their competitors don't get super excited, but the bot is just like, it's uninspired in terms of what him and his colleagues think. Again, the colleagues were like, it's not that useful, and Elon's having to correct them, saying, no, it's useful. I'm going to clip that part and show it to you guys tomorrow in the morning open stream, because that was insane. Their colleagues saying, well, it's not that useful. And Elon's like, well, it's kind of useful. It's like, no, dude, you're supposed to be selling this like this is going to be super useful. But I think they're being honest. And at the end of the day, look, I appreciate the honesty, but it's definitely not exciting for the stock. And then no update on margins, no update on deliveries. It's going to take a while until that happens. And until we see where it goes from there. FSD 12 it is. That's the last bull case this year. And I don't think it's happening this year. I don't think robo-taxis are happening. I think that's a pipe dream for the next couple of years, quite frankly. We had Steve on. The regulatory hurdles are immense. FSD, actually being there and being able to, be on your laptop in the back of the car and the thing drives you. I really genuinely, I hope to be wrong. I do not think that's happening for another 24 months. I don't. Every FSD video I watch on YouTube, the guy almost crashes. Like, it can be good. It's not perfect. It's a very hard thing to solve. When they get it to be perfect, I think the stock's going to do very well, especially when interest rates go low. But right now, that's not the case. That's just not the case. And so I think it's gonna be tough. I think it's gonna be tough to see that happening. In terms of, am I buying the dip? Given what I heard on this earnings call, I'm definitely not buying at 195. And if I miss it, oh well, I miss it. I'll buy it back at 215 if I care that much. But I would expect us to see closer to 185. I could be wrong. I could always be wrong. Maybe the dip gets immediately eaten up tomorrow morning. But I think we're gonna get some downgrades. I think some of the biggest bulls. I think Dan Ives is not going to be happy about this call. He said this call was very important. I don't think he's going to be happy about it. And I think that, in general, the street's going to have a tough time thinking that this is going to be a very exciting year filled with a ton of tailwinds for Tesla. 88% of you say Tesla is not green tomorrow. So we'll see how that plays out. It looks like sentiment is not the best when it comes to Tesla. How can green be over 195 and mid green is over 27? I mean, it depends on where it ends after hours. We got an hour and 10 minutes left until after hours. We'll see in pre-markets. But I'm just thinking, because the stock's already at 195, to me, if it at least gets back to 202, 205, that's a reasonable upside given how bad it fell after hours. But if the stock goes below 195, then if it even stays at 195 at this point, it seems. And again, it's not like the numbers were horrible, but the automotive business is barely growing single digits. And you got energy growing 54% year over year, but that's not enough revenue to make up like significant growth in the overall story of Tesla. Margins are getting better. China competition is high. 32% of EV sales or global automotive sales in China. BYD competition is heating up. They cut prices in Europe. The Berlin factory is going to be shut down till February 12th. It's like energy they can scale, but that doesn't make up for automotive revenue. The bot is non-existent. That's pure potential. Robotaxis are pure potential. FSD right now is pure potential. The automotive business is what's going to make up a majority of the thesis right now. If the stock gets to 150, 140, then you're talking about, okay, where are all these things that are not priced in? But at 195, I think the street's going to be like, look, a lot is priced in terms of its valuation against their automotive peers. And it's going to take a while until, we can get super excited for what else happens. I'm not a new bear. I don't want this to sound bearish. I will buy the dip if we get there to that 185 price. I mean, look, quite frankly, I was texting Steve right now. Steve hopes this sucker gets to 105. Like, if you're a Tesla bull, you should want this as hard as it's going to be to get to $100 again. Because buying Tesla at $300 billion of a market cap, I mean, the problem is there's so much potential in Tesla. You can't imagine it getting that low again. 2023 with the whole market crash. But if the market S&P is at all-time highs and Tesla's going to 100, that is the biggest asymmetric opportunity I've seen in life. Even if it gets to 150, that is one of the biggest opportunities I've seen. The problem is there's a lot of headwinds, and that potential might not get it to 150, but it also might not take it back to that 230 range. So we'll see what happens. We'll see what happens. Richard said, my wife just asked, who is this Fruit Loop? This is definitely a fruity shirt with a weird hat on my head. So I appreciate the accurate description of me being a Fruit Loop. Gonna buy Palantir at 16 with the Tesla I just sold. All right. So we got some people wanting to buy some Palantir over their Tesla. Mooncake says, best thing is he said he's not looking for economics. Yes, in terms of the 25% ownership, he definitely said, look, I'm not in it for the money. He has a shit ton of money. He doesn't care about the money. He cares about actual control. I believe he's authentic there. And that was just like a weird thing I think people were worried about. It's just like Elon being Elon. But I don't think it's something where, he actually leaves Tesla or anything like that. That's probably not going to happen. FSD was supposed to come out 5 years ago, according to Elon, so maybe 2035. The improvements have gotten significantly better. My concern is similar to Steve, the regulatory hurdles to make it real, where you don't have to care about the steering wheel. I don't think that's happening soon, dude. Maybe that means I'm bearish, but I don't think that's happening. I think some bulls are a little too optimistic about that. It's going to take a while. It's going to take a while for that to happen. So if that's the case, then the automotive business has to grow, and that's just a tough competitive business right now. And until I think when rates go lower, Tesla will rebound. But right now, we don't even know when rates are going to go lower. Probably in March. I mean, probably in May, not in March. It's going to take a while. It's going to take a while for this to play out. The biggest disappointment was energy. It didn't deliver this quarter. Yeah, energy declined quarter over quarter. It grew year over year, which is great compared to Q4 2022. Quarter over quarter, if it's declining, it's not showing enough momentum to be able to beat for next year as well. No investor would ever want the stock to drop 50% because it is an indication fundamentals of the company change. To an extent, I think sometimes stocks just drop because the market's irrational. I don't think the fundamentals of Tesla have fundamentally changed. I think there are some core things like that Dojo long shot. That is something that people have been pricing into their thesis. Even if Dojo is not real, that's a huge part of the AI robotics compute piece. And that's a big deal, them not having to pay billions to NVIDIA. For Elon to say, I got to clip that as well. We got to listen to it again. For him to say it's a long shot and it has a low probability of success, but it's an interesting idea. it's like what, dude? It's like, it just sounds like you're just going back on everything you said for the past year about integrating Dojo in a meaningful way. And so I'm looking at Farzad. Farzad did some notes right now. I'm looking at his list right now. And he's quoting Elon. He says, you need a lot of training for the inference level process. We are pursuing a dual path of NVIDIA and Dojo. Think of Dojo as a long shot. It's a long shot worth taking because payoff is potentially very high. It's not a sure thing at all. High risk, high payoff. Dojo is working. We're scaling it, but it's high risk, high payoff. It's a very interesting program and it has the potential for something special, but it is going to be a long shot. And he says at the end, it's possible with the right decisions that Tesla may have more compute than everyone else combined. Now, granted, if you're going to bet on anyone, you're betting on Elon, right? You're betting on fucking Elon. But, I mean, it's tough. I don't think that's the most bearish thing for him to say. It's just weird because we never heard him say that before. Either he wants to calm investors' expectations or he genuinely discovered something that makes him feel a little weirder about, about the state of Dojo right now. So, all right, that's it for me. Otherwise, look, this wasn't a horrible earnings. I don't want to get people to feel this was a horrible earnings. This was a sucky call just because no one was excited on the call. 195 right now after hours. There is a 50% chance, in my opinion, this dip gets bought up and we shoot back to 210 tomorrow. There's also a 50% chance that the street's like, you know what? We need to see more growth. We need to see rates come down. We just don't want to take the risk yet. The risk reward's not there. We're going to sell off, buy back at 160, 175. And then as rates come down, it'll come back to 220, 230 by the end of the year, which is a thesis that could play out for the rest of the year. Or it could go back to 210 and hover in 220, 230 because there's enough investors that are like, you know what, under 200 is a steal given the potential. And we're willing to give Elon the time to be able to execute. So we'll see what happens. We will see what happens. Thank you all for being here. Really, really appreciate it. Derek Wall says lots of downgrades tomorrow. Yeah, we can expect some downgrades tomorrow. I would expect that happens. All right. Not bad stuff. If you guys want to follow me on Twitter, let me put my Twitter in the chat real quick. You guys can follow me there. I'll be talking a lot more on Tesla. I've been tweeting about it all this earnings call. We'll be live for Finance Junkies at 9 p.m. My podcast. Type it in Finance Junkies on YouTube. You'll catch us there and we'll talk about the earnings call. Steve will be on today. We'll get Carlos and Vitalik's opinion. They're big bulls. Chris said the stock's going at 150 3 months ago. We'll see, what Chris has to say. And we'll keep going from there. And then the market open tomorrow, 8:45 a.m. We'll be back and we'll be discussing everything going on with Tesla. All right. Thank you, everybody. Appreciate you guys. Have a good one. Thank you so much for joining me on this earnings call. You guys could have picked a lot of people. I deeply, from the bottom of my heart, appreciate picking my stream, staying with me, listening to my thoughts, listening to my analysis. Hopefully it was productive, entertaining a little bit, and gave some value. And we'll be doing this for every single big tech company that's reporting earnings. We did Netflix yesterday. We got Tesla today, and we got all the rest of them coming up. Thank you, everybody. Appreciate it. I will see you guys in a couple hours. Have a good one. Good night.